the business has some asset to be used, and that asset has been created by some values that is taken from outsider, or it can be taken from the owner. Okay, I repeat again. Business owns certain things. It owns certain things. That means it has certain assets. It has certain assets. Okay, that assets are created in the business with the money, with the value taken from some people from outside or some people from inside. That means owner. Okay, so O's means the liabilities. The liabilities. Liabilities. Okay, always the liabilities are equal to assets. Okay, liabilities can be of two things. One is internal liability, another one is internal liability, another one is external liability. Internal liability, another one is external liability. External liability. That external liability only we simply call it as liabilities. Internal liabilities we call it as equity. Internal liabilities can be otherwise called as equity. Internal liability is otherwise called as equity. Okay. So accounting equation is trying to bring out the relationship, exhibit the relationship between what the company owns and what the company owes to others, what the company owns and what the company owes to others. Okay, what the company is owning is called asset to the company. What the company owes means the value to be paid back, the obligation. Okay, the obligation of the business, the monetary obligations of a business. Okay, that is nothing but in accounting term liabilities. Okay, if you divide the liability, if you go in micro level of liabilities, that can be of two types. One is liabilities are the values payable to internal people. Internal people refers to the business owner. Okay, if it is a sole trading concern means it's a sole trader, the single owner. If it is a partnership means the amount payable to the partners by way of capital, or the money what the partners have contributed to the business is called internal liabilities. Okay, if it is a joint stock company, joint stock company means limited liability company. If it is that, it is the share capital. It is the share capital. Am I audible?
Yes, sir.
Yes, Professor. Yes.
Yes, you are.
So it is internal liability. Then another one is the obligation payable to external people. It could be a bank loan. It could be the bills payable, the accounts payable, or it can be the debentures issued. Debenture means the loan taken by the company from the general public. Okay, so all those values which are to be payable to the external people. Okay, now just the external people liability we call simply liability. Internal liability we call it as equity. Okay, internal liability we call it as equity. If I say liability, then I am referring to external liability. Okay, so at any given point in time, assets of a business should exactly be equal to the sum of liabilities and equities. It's very simple, common sense. You cannot create anything. In the business without taking any money from anybody. Nothing is spontaneous. Everything is out of something. If I want to buy a machine, either I have to bring my own money from my own, my own pocket as a owner, or I have to borrow from a bank, or I have to just give a promise to the machine vendor to get the machine. These are the three possibilities. The owner himself brings money, or he just goes to the bank and arranges for a loan, or he himself goes to the vendor of the machine company, and giving a promise, getting a machine today, I will give you the money later. So only three possibilities. So your assets are created either by internal liability or by external liability. Say for example, just you are starting a business. Today you are starting a business. By investing rupees 1 lakh. By investing rupees 1 lakh. Okay. Now, what is the asset to the business? The cash is the asset to the business. Cash. Okay. Asset is cash. Just cash. The owner is bringing in cash. It is in the form of cash only. I have not used anything. Okay. So this side I'm taking it assets. I'm trying to explain you how the equations are always true whenever the transactions are happening. The equation will not mismatch. I mean, the left hand side and right hand side should be equal. That's what equation. Okay, assets should be equal to liabilities and equity. Now, in this case, starting a business with rupees 1 lakh rupee cash, with rupees 1 lakh rupee cash. Okay, starting business with rupees 1 lakh cash. Now what's happening to this asset side? Cash comes in to the business, cash comes in. That means 1 lakh rupee cash is there. 1 lakh rupee cash is there. This 1 lakh rupee of cash asset is a general term. Cash is a particular asset. That's a particular asset, component of asset. Okay. This has been created by the owner. The owner has given this money. The owner has given this money. So that 1 lakh is in accounting is called as capital, or you can call it as equity. Okay. Capital is very general term. Okay. Equity is very specific to accounting. Equity. Equity means if you want to know one single line of meaning of equity, equity refers to the net worth of the business. We can say net equity means the net worth, book value of the net worth, book value of owner's claim in the business. Claim in the business, you can say owner's claim in the business, or you can say it's a net worth of the business. Net worth. Whatever is there in the business is not the owner's claim. Okay, the business may have thousands and thousands of crores, but all those thousands and thousands of crores of asset is not belonging to the owners. Okay, that might have been created by some other, liabilities or some other loans taken from anybody. So how will you calculate net worth? Net worth is equal to how will you calculate net worth? Net worth is equal to, can you please tell me?
So assets minus liabilities.
Yeah, exactly. Asset minus liability is called net worth. The book value of the money. You don't confuse. This net worth is the value available to the owner from the book. I mean, according to the book, that's the value. According to the book, that's the value. But if you sell the assets and you realize you settle off the liabilities, there will be a different scenario. Market value comes into picture. Okay. But accounting equation just tells us how the assets of a company is exactly equal to the liabilities and equities in terms of book value. So now this 1 lakh is net worth of the business. If the business is closed today, this 1 lakh rupee is belonging to the owner. So equity is nothing but the book value of owner's claim in the business. What the other way of telling equity? Net worth. Net worth is nothing but capital introduced by the owners plus or minus profit or loss earned over a period of time. Can I say like that? Equity or net worth is nothing but the initial capital introduced by the owners plus or minus the profit or loss earned by the business over a period of time. Okay, that is called equity. Okay, so if you say simply capital, that refers to the initial capital. Equity means the net worth of the business. All right. So any doubt according to up to this first transaction? Starting a business with cash rupees 1 lakh. How the equation is? The assets are equal to liabilities plus equity. Liability is nil, equity is 1 lakh. Asset side cash is 1 lakh. So in equity also, if you want to write down the exact name of that particular component, it is capital. So equity includes capital plus profit earned minus loss incurred, loss suffered. Okay, I'll take another transaction. Can anyone tell me one transaction? Then I will take the answer. Yeah. Anybody?
Rent paid.
Okay, immediately you are paying rent. You now only started a business. You have taken a building.
Achha, okay.
Purchase of machinery. Sir, purchase of machinery.
Bank account.
Right.
Bank account.
Anything, rent paid also okay, not a problem, but just logic. So purchase of machine. Purchase of a machine. For how much, madam?
5 lakhs, sir.
5 lakhs.
50,000.
Okay, 5 lakhs. You are buying machine for 5 lakhs. Okay, how much the business is having already?
1 lakh.
1 lakh only having. Then how are you arranging it? How are you managing it?
Sir, 50,000, 50,000.
On credit.
No problem. You can buy a machine which is worth rupees 5 lakh. No, it's okay.
On credit.
Loan, sir.
So
Yeah,
then
okay,
it
first
becomes a
I'll take-
liability. Liability it will come into.
Which
Taking
one I want
loans
to
from
take?
the
I want
bank.
to take 5 lakhs
Yeah.
on credit.
Credit.
Okay. You don't have money. You have only 1 lakh rupee. You met a supplier of a machine and you negotiated for a later payment. Okay. Now, how the equation? Is there any change in this cash of 1 lakh rupee what we have?
No, sir.
No, it remains as it is. Is there any new asset coming in?
Yes.
Missionary is coming in.
Sorry?
Missionary is coming in.
Yeah, machine is coming in. So the business from today onwards is going to use a machine which is worth rupees 5 lakh. Which is worth rupees 5 lakh. So that becomes an asset for the business. So the asset of the business is increased by 5 lakhs. The asset of the business is increased by 5 lakhs. Okay. Then how it is increased? The liability before it was nil. Now the liability becomes 5 lakhs. This 5 lakh is creditor. What is this creditor? The person from whom, the company from whom you taken a machine is called creditor. You have to pay this 5 lakh later. That is what the accounting equation. Then equity part remains the same. Equity part remains the same. You did not disturb anything on equity. Okay. Yes. Any other transaction? Next one.
Revenue from the business.
Sorry, sir.
Revenue received from business. While starting
Revenue
the business.
received from the business. That is very vague, no?
So let's do sales.
Manpower.
Goods sold.
Manpower.
Before that, manpower,
Goods
sir.
sold and
Manpower.
building.
Sir, one
Manpower.
at a time.
Yeah, how about manpower, sir?
Sorry.
Manpower, hiring, maybe hiring 5 people, for example.
Okay, hiring
Salary
5
paid.
people.
Hmm.
Wait, let him say. Hiring 5 people. Is it a transaction? Is it
No,
a
sir.
financial transaction?
No, sir.
Hiring is not transaction. You're right.
Yeah, hiring 5 people or 100 people are not a financial
Transaction.
transaction.
Correct.
Somebody
Yeah.
message-
Depositing some money in bank.
But paying salary to them is a transaction.
Transaction.
Yeah, yes.
Yes.
Okay, let me take another example. We need a bank account. Okay, government is saying we cannot go with cash. So we need a bank account to transact. So open the bank account by depositing. To do your business, we need a bank account, no? Open the bank account by depositing rupees 25,000. 25,000. Now what will happen?
Cash will decrease to 75,000, sir.
Cash will increase.
It will decrease to 75,000.
Okay, cash will decrease by
25,000, it will decrease. It will become
75,000.
75,000.
75,000. Cash becomes 75,000. Okay,
And
cash
one more
becomes
item added, sir, bank.
75,000. Machine remains as it is. There is
Yes,
no
sir.
change in the machine. Okay.
And
But
bank is added,
bank
sir.
balance was
Cash
nil
is
so
bank.
far. Now bank balance, bank account or bank balance. Bank
25.
balance is increased by
25,000.
25,000. Asset side, same 1,50,000 is there. Same 1,25,000. Sorry, 1,50,000 is there. But the component of asset is changed. Component of asset is changed. Okay. Creditor remains the same. Capital remains the same. Okay. Next, suppose purchased goods, purchased stocks for rupees 2 lakhs on credit from Raj Limited. Okay, Raj Limited. From this company, we are buying goods without paying any money. Okay. Now what's happening? Is there any change in cash?
No, sir.
No, sir.
No, because we are buying it on
Credit.
We are buying it on credit. So no change in cash. Bank balance also not disturbed. We are not drawing any money from bank. Machine remains as it is.
So
No.
liability Raj Limited is equal to 2 lakhs.
Yeah, liability Raj Limited, but we don't want to write Raj Limited. It's also a creditor. Raj Limited is one of the creditors. So we just add with the creditors. So 5 lakh of creditor becomes
7 lakh.
7 lakh of creditor. 7 lakh of creditor. Look at this. Now goods, we bought goods.
Goods worth 2 lakhs to be added
Goods
in.
rupees, how much? 2 lakhs. Goods rupees 2 lakhs is another additional asset. Additional asset to us. Look at this. We had 3 assets. Now one more asset comes in. That is because of purchasing of goods. Purchasing of goods from Raj Limited. We did not pay money, so Raj Limited is one of the creditors for us. Okay, we have to suppose today if you want to close the business, you have to pay 7 lakh, 1 lakh to that machine provider, okay, machine seller to you, and another one is good seller to you, that is Raj. Okay, only 1 lakh will come to the owner. That's the meaning of this. Okay, next, suppose sold goods, costing rupees 1 lakh, for cash rupees 1,20,000. Look at this. Next transaction. We opened a business, we hired a building, we hired some laborer, okay, and we opened a bank account, we bought machine, okay, and we purchased goods. Okay. Now we are selling the goods. Sold goods costing rupees 1 lakh for rupees 1,20,000. So what's happening now? How it is going to change?
Sir, cash will become
Cash is
1,20,000 added to
Cash is
75,000.
going to be increased because you are collecting. This is what some gentleman was telling in the beginning, revenue from business. Revenue from business is a very general term. What kind of revenue? Revenue means you are selling the goods and you are getting money. So 1,20,000 rupees you are getting newly from the customer. That is going to be added with your existing money. Okay, you already had 75,000. Now you are getting 1,20,000. So it becomes
1,95,000.
1,95,000. 1,95,000 rupees is the cash available right now. Okay. Then is there any change in other asset?
Yes, sir. Goods will decrease by 1 lakh.
Goods will decrease by 1 lakh. So it was 2 lakh. Look at this. It was 2 lakh. Now we sold 1 lakh costing goods. That means 1 lakh worth of goods you sold. So from 2 lakh, the goods are reduced by 1 lakh. So it is becoming 1 lakh. 2 minus 1 is equal to 1. Creditor remains the same. You did not pay or you did not create a new obligation. If you create a new obligation, it will be increasing. If you pay off your creditor, it will decrease. Okay. Then capital.
2,20,000, sir.
It becomes 2 lakh.
2,20,000.
Sorry, 1,20,000. That means retained earnings or profit. Retained earnings. That is a profit, but the owner did not take that profit to his home. It is still there in the business itself. That is why it is called retained earnings. Retained earnings. Okay. So this is how the accounting equation changes whenever there is a transaction. The accounting equation changes like this. Okay. I will take another one example, then I'll ask you a question. Okay. Now some gentleman was telling, paid rent. So paid rent rupees 10,000. We don't know we have cash, so we can pay more rent. 20,000. Paid rent 20,000. Now what will happen? It is simple mathematics. It's nothing accounting, nothing. It's simple mathematics. But we have to understand where the minus and where the plus. Paid rent. So what will happen now? Paid rent.
Sir, it's by cash or some other method, sir?
Cash.
Nothing is told. No, paid rent rupees 20,000. What is the other method? Can you tell
It's
me
by
any other
cash
methods
or
available?
bank, sir.
Yes, cash or bank is possibility, but nothing is given. Paid rent rupees 20,000. Okay, if you want to more clarity, by
Bank, sir.
cash.
So the cash will reduce, sir. So 1,85,000 will become.
Yes. So by cash, so cash will become 1,75,000. Because of this 20,000, cash will reduce by 20,000. Okay. So whenever you close this equation, whenever you finish this equation, you check it, cross check it, whether it is equal both side or not. Both side or not. Look at this. Now this is 1,95,000. This is 25,000. This is 5 lakh. So how much it is equal to? Now check it. Is it equal? 1,95,000 plus 25, 220. 220 plus 5, 720. 820. 8 lakh. 8 lakh. This is 8,20,000, no? Check it here. 7 lakh plus 1,20,000. So 8,20,000. Both sides are equal. 8,20,000, 8,20,000. 8,20,000. Okay. Here it is 7 lakh. Here it is 1,20,000. 1,20,000. So that is how it becomes equal. 8,20,000 is equal to 7 lakh plus 7 lakh plus 1,20,000. So you have to cross check whenever you close this one equation. Next. So now it is this 1,95,000 has become 1,75,000 because of the reduction of 20,000 rupees in the cash. Creditors, any change?
No, sir.
No
change.
No change.
Then what will change here?
The 20,000 will be reduced.
Yeah, from your 20,000 becomes 0. Whatever you earned, you spent now. Okay, whatever you earned, you spent. Right? Now it is 8 lakh. This side also 8 lakh. 2 plus 5, 7, 7 plus 1, 8. So 8 lakh. So here it is 7. Okay. Okay. Any other transaction? Any other? If you want, you can say 1 or 2. We can take. Then we can go for the next one.
Can you add bills,
Yes.
utility bills, and taxes?
Yeah.
Sir, sold goods
Should,
Sold goods.
on
Those
loss,
who are not talking to me, please mute yourself. Yeah. Sold goods.
on loss or
Depreciation.
discount.
So sold good on discount something.
Sound something and all. Don't tell me. Tell me the clear one.
Sold goods worth 20,000.
Sold goods.
Worth 20,000 with
Don't
10%.
say what the costing. That becomes very clear.
Costing.
Sold goods costing rupees
50,000.
50,000.
With the discount 10%.
utility bills?
With the discount rupees.
5,000.
How much you are getting from the customer?
45,000.
45,000.
Sir, can you please repeat the last para?
This one. Sir, this one you are asking about. Somebody was requesting to
Yeah, sir.
explain again. This one?
Yeah.
See, we have paid rent rupees 20,000 cash.
Hmm.
So we already have cash of rupees 1,95,000. So from 1,95,000, 20 is gone. So it becomes 1,75,000. Remaining all assets are the same. So I return again the same. Creditors are not affecting because I did not borrow anything from anybody right now because I'm paying only rent to my landlord. Okay. So rent, if it is paid, that is a loss or expense to the company. Expense that need to be minused from the revenue of the company first. If revenue is not there, then from the owner's worth it will be reduced. If you pay rent, if you pay anything for that matter, anything if you are paying without getting any asset, if you pay something that is called revenue expenditure, that's called just expenditure. Now you paid rent. For what you paid rent, you utilized some floor area of a landlord for keeping your goods and selling. Okay, such rent, such expense should be matched with the income earned from that floor. That floor is nothing but the shop where you kept your goods and sold. Okay, so you have to compare that revenue with the expenditure. Now the expenditure is rent, the revenue was sales. Previously you made this 20,000 rupees, you collected from one of the customer along with your goods sold. Okay, goods
Yeah,
sold.
sir, this thing that in the before para, the creditors were 7 lakh, but you have mentioned the 7 lakh plus. What was that?
Which one? Which one?
7 lakh
Nothing,
plus.
nothing, actually. It's only 7 lakhs.
This is only 7 lakh.
Plus is not required.
This 7 lakh is nothing but the Raj
Yeah, it is
Limited
only
from
7
whom
lakh.
we bought goods for
Yeah.
5 lakh rupees.
5 lakh and
2
the
lakh
2 lakh
rupees.
from the Raj Limited. Yeah.
Yeah, and 5 lakh rupees we taken machine from
That
some
was the
company
purchase.
on
That was the
credit.
beginning. Okay.
This total 7 is
Okay, all
creditor.
clear, sir.
Landlord will not be credited as a creditor. If you did not pay money after the due date, then he will become a outstanding rent. He will not write his name, but we will write outstanding rent. Outstanding rent is a liability. Now this 20,000, what you pay? I mean the rent, how much? Yeah, 20,000. If you did not pay, okay, you are
Now I
telling
have
him,
to
no
pay
sir,
this
I don't have money today, I will pay you later. That time he becomes a creditor to you. You have to pay, write it here, outstanding rent, outstanding rent. But now you just paid, so from the profit you have to minus. Okay, all right. So sold goods costing rupees 50,000 for rupees 45,000. You give it on discount or you don't give it on discount, that is up to you. Okay, but how much you are getting? How much you are getting? That's the point here. How much you are getting? Okay, so how much you are getting here now?
45 we are getting.
It's a loss proposition actually.
Yes,
So
that's a loss.
1.75 plus 45 will come now, sir. Cash.
So cash is becoming. So
1.75.
if it is becoming
2.2 lakhs.
220, right?
Correct.
220.
Right.
Okay, we are receiving 45,000 rupees from the customer. We already have 1,75,000. So 1,75,000 plus 45 is becoming 2,20,000. 2,20,000. Okay, bank no effect, machine no effect, goods are reduced. For how much goods are reduced now? 1 lakh worth of goods were there with you. Now you sold
50,000.
50,000 worth of goods. So now goods worth is equal to only 50,000. Okay. Creditors. So sold goods costing rupees 50,000 for 45. Creditors no disturbance. Okay. But capital is becoming less.
50,000.
Why it is becoming less? It is becoming 5,000 rupees loss to the company. Accumulated loss. So 5,000 rupees loss. So it becomes 95,000. It becomes 95,000.
Okay.
Yeah. It becomes 95,000.
Clear, sir.
Yes. So I was telling you to understand balance sheet as well. Okay, balance sheet. Suppose rearrangement of all these items into a table is called balance sheet. Okay, into a table. Look at this. Liabilities and equities. Liabilities and equities. One side. Okay. Then another side is assets. Assets. So liabilities and equity. Suppose on this particular day you are preparing a balance sheet. On this particular day, if you are just preparing a balance sheet. Okay, balance sheet. Balance sheet is nothing but a statement which shows the assets and liabilities of a company on a given date in a tabular format. Okay, assets and liabilities of a particular business on a particular day, Okay. Now, on this particular day, if you are preparing a balance sheet, so capital becomes 95,000. I'm writing it here. Capital becomes 95,000. 95,000. Okay. Then what is the other item in that particular heading? The other particular item in the heading is creditors. Creditor is a liability. Yeah, creditor is a liability. So I'm bringing this creditor here. Creditors, the amount 7 lakh. I'm writing it here. Okay. Likewise, the other item in the balance sheet is asset. So I'm bringing all these assets one by one. Cash, bank, machine, then one more is goods, stock, goods and stock. So the respective amount I'm bringing here, respective amount 25,000, 5 lakh, 5 lakhs, then 50,000. 50,000. So these are the various components of assets. Now you take a total of assets and liability side total. Okay, so 7,95,000. Look at this side, 7,45,95. 7,95,000 is the total. 7,95,000 is the total. 7,95,000 is the total. This is the balance sheet. Roughly we have done it. See, this is the balance sheet. You can just accountingly it is okay. But if you go to company form of business organization, government specifies certain format similar to this, but the arrangement, which one should come first, which one should come next, that kind of formats are provided by the government. So all the companies in India, if it is registered under Indian Companies Act, so Indian Companies Act provides a format of a balance sheet. In that format, we have to just fill these items. But this remains the same. The fundamental remains the same. One side is assets and liability. Another side is balance sheet. Another side is balance sheet. Okay. Another side is balance sheet. Item number 1 is assets and liability and balance sheet. Liability and equity. Item number 2 is assets. So this is the balance sheet, simple balance sheet. So this about your accounting equation. Any doubt in this?
If we have taxes and
if you prepare a balance
bills
sheet
to
on
be
any particular
paid,
day, it
does
should be
that-
equal assets and liabilities plus equity.
Sir, we can prepare this in
Hello?
Excel also, right?
You can prepare in a paper also, no problem. But what is the
For
purpose?
assignment, sir, for assignment.
Any-
Because there's
anything is
something,
fine.
some specific format is mentioned, so I had it out. So can we
You can
do
prepare,
it?
you can prepare. You can prepare.
Okay.
Yes. So any doubt in this accounting equation?
Sir, balance sheet will not reflect the profit or loss of the company.
Sorry?
Balance sheet will not reflect the profit or loss of the company.
This is reflecting now. If you want to reflect separately, you can have like this.
One more. Sir.
Loss 5,000, the net effect is 95,000. Okay. See, that's what I'm telling you. It's only a general idea about the balance sheet. But really, if you want to have a company balance sheet, this loss will be an asset. This loss 5,000 will be treated as an asset in this side. Loss is an asset to the company. Don't laugh at me. Why he is telling like this? Loss is an asset to the company. Profit is a liability to the company. Normally, you may think other way around. Loss is an asset to the company. How? Don't think that you can go and sell that loss and you can realize some money. In that way, it is not asset. Loss means the owner has to give the money to the business, or the owner has to compromise. Owner has to adjust the loss from his capital. In that way, loss is considered to be an asset to the company, and the profit is considered to be a liability to a company In what sense? It is to be payable to the owner. The business has earned profit. That money is not the business money. That money is to be given back to the owner. That is why it is considered to be a liability. Okay. So instead of minusing from capital, you can show here as asset. The next item you can show. That's called fictitious asset. You cannot sell it. You cannot sell it. Okay. Fictitious asset, which can be now. Lost asset. Lost asset, which has book value but not as any market value. Market value is 0. So eventually, the businessman should compromise, should detect the loss from his capital when the business is closed. So now the business is ongoing, going concern concept, ongoing. It's not closed. So next year the business may have 1 lakh rupees profit. That time 1 lakh plus 1 lakh, 2 lakh minus 5,000 becomes 1,95,000. That's the amount payable by the business to the businessman. In that way, the profit and loss is shown in the balance sheet. Normally, profit is shown separately here under the heading called equity, in the name of retained earnings. If it is a profit, if it is a loss retained, loss occurred, that's minus from capital. Okay. We'll discuss in detail when we are going for balance sheet, the next concept. Yeah. Any doubt with regard to accounting equation?
Yeah, hello, sir.
Yeah.
Yeah, sir, this is Siddharth. I just want to ask that.
Little louder, sir. Little louder, please.
Yeah, I just want to ask that you are telling that from the credit we are taking 5 lakhs for purchasing some machines, and after that from 2 lakh from the Raj Limited, if I'm not wrong, right? From the Raj Limited. But if the profit, if I have to show the profit, then these things I have to pay off on basis of per month.
No, I'm not clear about you. A little more louder and be clear in your sentence.
I have to pay off for this amount, right? Because I have taken.
Yeah, you have to pay this 7 lakh. You have to pay this 7 lakh is payable to 2 people.
Payable to people. So basically,
5 lakh is payable to the machine company, the company from which you bought a machine, and 2 lakh from the company where you purchased your materials.
Yeah, but for running my business, I definitely don't show back this money to that company itself. But by paying some, because each and every month I have to pay some money to this
That depends upon you and him, the contract. What is the agreement between the machine company and you? Each and every month you pay, or you pay in the next 5 years. That is left to you, left to the agreement.
Okay, so this balance sheet basically based on 1 month performance, right?
No, it is not 1 month. It is on 1 day. It is on today. The balance sheet. This is on today. As on. What is the date today? 6th December. 6th December. That's all.
It's only 1 day business thing, right?
Sorry?
It's only 1 day business thing, right?
Yes.
On 1 day, whatever the
Not
cash.
for 1 day. It is on a day.
Status as on now.
As on now.
It is not
On
for
that
a
day,
day.
yeah.
It is on a day.
Yeah.
On a day.
Are you able to make a difference? It is not for 1 day. It is all not happened on a particular day. Okay, it's all happened in so many days. It's all happened for a month or a year or a week or even a day or even 1 hour. No problem. But
no,
if
actually,
you
I just
change, if you involve, once again, if you involve in any one transaction, definitely there will be a disturbance in this kind of values. Suppose the next date or the next hour, 6th, 12, 11 o'clock, you are entering into another transaction. Suppose paid a check for rupees 5,000 to Raj Limited. Now this equation changes. That eventually changes your balance sheet as well. Now this 2,20,000 becomes 2,15,000. Now Raj is received 5,000 rupees from us, so he will have to receive only
6,95,000.
Okay, only 5,000 less. Okay, so that is becoming 6,95,000. 6,95,000, right? 6,95,000. So now it's the same date, but the next minute, so it is changing. But we will not prepare a balance sheet every minute by minute in manual accounting. But if you want a balance sheet every transaction, it is possible in the computerized accounting. Whenever you record these transactions, you remember those journal entries or you remember the subsidiary books. Whenever you write this entry in a computerized accounting, definitely automatically this balance sheet will change. The value will change. What will change? This 6,95,000 will become the value of creditors. 6,95,000 instead of 7 lakh. Then in cash, it will become 2,15,000. 2,15,000. So 5,000 changes. So it becomes 90,000. 7,90,000 and 7,90,000. The balance sheet keeps on changing for every transaction. For every monetary transaction in a business, the balance sheet will get affected.
Okay.
Because for every transaction, assets or liabilities or capital are getting affected. Any one of these or any two of these or three of these get affected. Okay. I simply tell an example how the three of the things are getting affected. Sold goods, costing rupees 60,000, costing rupees 60,000. Okay. For rupees 50,000, you sold goods for 50, which is worth rupees 60. So now your capital becomes less 10,000. Your cash increases by 50,000, and your goods decreased by 50,000. Okay. So that is why assets also getting affected, and another way the equity also getting affected. Okay. Or any one transaction may affect only asset. One asset is increased, one asset is decreased. Look at this machine case. Look at the, okay, so machine was purchased on credit. Leave it. If it is purchased on cash, cash will reduce, machine will increase. There won't be any change in the liabilities as well as in the equity. So you have to look into the transaction, what is happening exactly.
Sir, I have a question here.
Yeah, please.
Now you said you are paying 5,000 by check, so the amount will get deducted in the bank, right? Not
Yes,
in
yes.
cash. Not in cash.
Bank, yes.
Okay.
Where it is, sir? Where it is?
Here, right there.
Yeah, sorry. I'm sorry. So bank account becomes 5,000. I'm sorry. Yes.
Thank you, sir.
Okay. One asset decreases, one creditor decreases. Look at this. If one asset decreases, definitely there should be possibilities. Look at this. If asset decreases, another asset should increase. That's one possibility. Another asset should increase. Or if asset decreases, another asset should increase. Or a liability should, can you tell me?
Increase.
If asset decreases, liability should
Increase.
also decrease. How it is? Payment of 20,000 rupees. Take the same example. Payment of 5,000 rupees to Raj Limited. So liability decreased, asset also decreased. Okay, that's a possibility. If assets decrease, another assets increase, or liabilities should decrease. If liabilities increase, another liability should decrease. Correct? No, another liability should decreases. Okay. Or liability increases means assets should also
Increase.
Assets should increase. Assets should also increase. Okay. Suppose if asset asset increase. Asset increases. What is the possibility? Asset increases.
Liability
Another
also.
asset, another asset
Decrease.
should decrease. Should decrease.
Or
Otherwise,
liability increase.
equity or liability will increase.
Increase.
That's a relationship. Okay. Suppose example for this. Capital introduced by the owner. Cash increases, asset increases. Actually, equity also increase. Equity also increase. Equity also increase. Okay. Equity also increase. Suppose loan raised from the bank. Loan taken from the bank. Bank balance increases, asset increases. Equity remains the same, but liability increases.
External liability will increase.
External liability increases. Okay. So this is how the relationship between these three terms. Only these three terms, gentlemen, all of you please understand. Within these three terms only we are playing everything in accounting. Within these three terms, asset, another one is liability, another one is
Equity.
equity. Only these three things. Everything is based on these three things only. Whatever you think in accounting or in business happening, okay, with these three will get affected. Any one of these three, or any two, or all the three will get affected. How do we capture that decrease or increase? That is what accounting. How do you capture it, and how do you help the management to know the result of such changes? Okay, but this will not happen. This will not be captured every day. I mean, this will not be used for finding out results every day in manual accounting. But recording will happen. All the changes, whatever we told here, no, whatever you told, this all will be recorded. This is not a record. This only understanding for us. We have taken a detailed analysis and understand. Okay, it is not a record. Please understand. This table is not a record kept by a business. If we keep like this, it is not at all possible for business to keep all the records. So we have some other systematic way of recording all those transactions. That is what journal or ledger or subsidiary books. Okay, this only for our understanding we created this table. Okay, how the change in one particular variable of accounting is having a relationship between another accounting variable. Only three accounting variable: assets. So assets may be of fixed asset, and it can be of current asset. It can be of current asset. Current asset. Liabilities. Liabilities. Again, current liabilities, and non-current liabilities. Current, non-current. Current means which need to be paid immediately within one accounting period of time. We don't have much time to prolong it. That kind of things are current liability. Non-current liabilities are those which we have to pay some time. But the obligation itself is providing us the time. The obligation itself, contract itself is providing us some time. Okay. EMI. EMI can be a current liability. Creditors, sundry creditors, current liability. Tax payable, current liability. Rent payable, current liability. Salary payable, current liability. Suppose you've taken a loan from a bank for 10 years, that becomes a non-current liability. After 10 years only you have to repay. Suppose if that loan is having a every month repayment, then that part of the loan is current liability. I tell you again, if you've taken a loan of 10 lakh, from State Bank of India for 5 years, tenure, 5 years tenure. These are long-term liability. Long-term or non-current, both are same. Non-current or long-term, both are same. Okay. Suppose you made an agreement with the State Bank of India. Every year you will pay off 1 lakh rupee along with interest for next 5 years, or next 10 years, or next 5 years, whatever it is. Okay, that part, the amount due in that year is current liability. The remaining all non-current liability. Okay, so that is the difference between current liability and non-current liability. Same thing, current assets are nothing but any assets which can be changing its form, its substance from one to another very often because of the business custom, because of the business activity. Cash is an example for current asset. Today you have cash. Tomorrow you might have deposit, you might be depositing in the bank. So cash becomes bank balance. or you might be paying that one to some creditors or to buy some goods. So it is changing. Current means what? Current, English meaning current, CURRENT. Current means flow. It is always in the flow. Okay, so that's called current asset. Example: cash, bank, stock, debtors. All these are example for current assets. Okay, fixed assets are those assets which can be kept in the business for using it for a longer period of time. The very purpose of possessing that asset, holding that asset, is to use it for a longer period of time. Example: building,
Machinery.
land, machinery, motor car, all these things. But again, the nature of asset is being determined by the nature of business. That's what I told you in the very beginning classes. Purvankara, or you take any real estate companies. For them, land is not a fixed asset. Okay, land is not a fixed asset. For Dayanand Sagar University, the building, land is a fixed asset. Okay, for any company which is doing a normal business, land is a fixed asset. For any company which is doing a real estate business, land is not a fixed asset. Okay, for them also, there are some land may be a fixed asset in which they construct their corporate office, they construct their own registered office. That could be a fixed asset. But all other land, piece of land, what they are buying and selling, is a current asset, because they are dealing in lands. Okay, so fixed asset and current asset. But in general, land and building is a fixed asset irrespective of the business organization. Without knowing the nature of the business, we just classify land and building as a fixed asset. Stock is a current asset. Cash is a current asset. Okay, right. The third one is equity. Equity includes capital of the business plus or minus profit or loss. So whatever you do in the business that is affecting any one of these three, or all the three, or any one of the two, how do we capture that is called recording of business transaction. How do we find out the result of these happenings are called as profit and loss account and balance sheet. Okay, with this, now we move on to the next concept called financial statement of joint stock companies. You remember in the beginning class I was explaining you there are different forms of ownership of a business: sole trading organization, into undivided family, partnership, cooperative form of business organization, and the last one is joint stock company form of organization. Joint stock company form of organization. We in our MBA are going to concern only about how the joint stock companies are dealing with their financial statements, because the other four forms are very much insignificant. Joint stock companies are managing lot of money coming across the globe, so we are concerned with joint stock company. And like one more point, joint stock companies are complied with lot of legal requirements, because they are using others' money in a large volume. Okay, I am a shareholder in Reliance. Reliance is somewhere. I am in Bangalore. I don't know what Reliance is going to do with my money. So government wants to ensure the investors, your money is invested in the purpose for which you given as a shareholder. So that is being ensured through certain procedures, certain statements. Such statements we are going to discuss. So we are not going to discuss about the other financial statements of other forms of business organization. Only joint stock company. What is joint stock company? Which is having a share capital, which is having a shareholder. Joint stock company. Okay. So what are financial statements? Financial statements are nothing but those statements which are prepared by the business organization at the end of one accounting year to know the profit or loss of the business, and to know the financial position of the business. Only these two. Only these two. To know the profit or
Excuse
loss.
me, Professor.
Yes, sir.
Yeah. So joint stock companies means the companies which have stock and which are listed.
Not necessarily. Students are those students not only studying in Dayanand Sagar University. Students are students. That's all. No, we cannot say that if you listed only you become a joint stock company. No. Okay. Any company which has share capital. The
Okay.
stock here refers to, please don't confuse the stock what we normally use in our colloquial term, stock in trade, goods. This stock is nothing but the bundle of shares is called stock. Stock here refers to share capital. Okay, I want a corpus. I am a promoter. I want a corpus. I have 20 lakh rupee, but I have a business idea for 1 crore. So remaining 80 lakh rupees I am collecting from very many people and I am giving them stake in my business. I consider them also one of the owners in my business. Okay, so for them I give ownership in my business. That ownership is called stock. Okay, you might have listened to this word, no? Stakeholder. Stakeholder is a very broader term. Stakeholder includes the stockholder, the shareholder as well. Government is a stakeholder. Educational institutions are stakeholder. Employees are stakeholders. Okay, customers are stakeholders in a business, but all stakeholders are not the shareholders. Stakeholder is those people who are connected with the business. Shareholders are those people who have given money to the business as a owner. So listed means you are allowing your shareholder to buy and sell your share in a particular stock exchange. For that purpose only you are going to a National Stock Exchange or Bombay Stock Exchange to list your company's equity share. At the same time, I might have started my company in the form of limited liability company, but I don't want to get my company listed. Example, private limited companies will not get their shares listed. Private limited company, but they are joint stock companies. Okay, wherever you are finding this word in the company's title, in the company's name, all those companies are called as joint stock companies. This is the indication. Usha Limited, Reliance Industry Limited, HDFC Limited, ICICI Bank Limited. If this word limited is there, then that business is in the form of joint stock ownership, joint stock company. Okay.
So actually
If
that
you
means
want to, once again, if you want to allow your shareholder to sell their shares to anybody without your knowledge, without the knowledge of existing shareholder, then you go for public limited company. Okay, that will have only this name, that won't have a word called private limited. This company is unlisted. This company is unlisted. Not even unlisted, you can say it's a private limited company. Okay, it's a private limited company. It will not come to the stock exchange. It will not allow its shareholder to sell their stock in the stock market. If you are a shareholder of this company, you have to get a permission from the existing shareholder to sell your shares to outsider. If they don't allow, you cannot sell. You have to sell to the existing members only. Okay. Yeah, tell me now.
Understood. Thank you.
Yeah. So private
hello,
limited,
sir.
public
Hello.
limited. If you have only this word, that means it's a public limited. It's a public limited. This company, majority
hello,
they will list their shares in the exchanges. But here also there are some companies, public limited, they will allow their shareholders to sell their shares without the knowledge of the existing shareholder to anybody, but they will not go for listing. There are some companies, limited companies, public limited but not listed. Okay. But 95% of the public limited companies are listed companies, because the very purpose of public limited is not getting disturbed because of the ownership changes in the stock holding of the company. Okay, today you are the owner, tomorrow you sold the shares to somebody. I don't bother about that. I have my money. The original person who has given the money is there in the company. Okay, if he does not want to continue the company, he is selling his ownership to anyone and he is quitting. As the other member, collectively the other members don't bother about it. I don't get disturbed out of that change of ownership. Only in the company they will register the new owner name. That's all. Money does not come to company. Money does not go away from the company. Okay. So that is public limited, private limited. But we are talking about joint stock company in general, but mainly focusing on public limited, because private limited company is having some privilege or some kind of exemptions. Only limited number of people are there. Maximum 200 shareholders can be there in a private limited company. Maximum 200 shareholders. That's all. Not more than that. Okay. If that is the case, government does not much bother about these companies. If the money comes in, money goes out, that 200 members are relatives or friends, they will take care of it. But in a public limited company, crores and crores of people are involved. Crores and crores of money is coming and going. So government wants to ensure the accounting aspect of joint stock companies in the form of public limited. So it has a lot of procedures. Yes. Anything else? So this is the basic objective of accounting, to know the profit or loss, to know the financial position of the company. Irrespective of what form of business organization you are. These are two basic objectives of the accounting. Okay. These two objectives of accounting are achieved by preparing certain statements. Such statements are called as financial statements. Such statements are called as financial statements. Here it is, profit and loss statement, profit and loss statement, or profit and loss account, profit and loss account. This is nothing but the balance sheet, what we just prepared. This is the balance sheet. Okay. So profit and loss account, or profit and loss statement, or income statement. Somebody will call it as income statement. Okay. Another one is balance sheet, or somebody will call it as position statement, position, financial position. Okay. So financial position is depicted in balance sheet, and the profit and loss is known, ascertained, calculated, not estimated, calculated in a statement called the profit and loss account. So these two statements collectively called as financial statements. This is common for any form of business organization, but the way in which you are preparing, the style what you are displaying, that is changing from one form of business organization to another form of business organization. Now we are concerned with only the style and the shape and the format of joint stock companies' financial statements. Okay, right. So there are different types of financial, different types of joint stock companies and features I have written here. I will pass it on to you. You can go through that. That is not a subject matter here. Now come to the accounting aspect of it. Before going to the accounting aspect, this you have to understand, because this is coming in the way of an accountant, which brings money or which takes away the money from the company. So the accountant should know. The company form of organization will collect money from the owner. This part, the major part of the money comes from the owner when you start the business in the name of capital. The capital contributed by the owner is called equity capital. There are many owners, so we call it as equity capital. And there are some other shareholders called preference shareholders. They also give money. Okay, if you want to collect, you can collect. Government allows you to collect money from preference shareholder. They are not the owners of the business. They get fixed amount as their return. Okay, the return payable to the owner of the company is called dividend. Please understand, dividend. The return, the profit share to the owners of the company form of business is called a dividend. Dividend. Share in the profit. Share in the profit. Share in the profit is called dividend. Okay, so the owner, real owner, is called equity shareholder or common shareholder, common shareholder, or you can call them as ordinary shareholder, common shareholder, equity shareholder. All are one and the same. In India only we use the word equity shareholder. In abroad, especially Europe and the US, they use common shareholder, common stock. They use the word called common stock, but one and the same. Okay. Come to another category. These people also ready to give money to you, but they want assurance that this much you have to give me from the profit. If profit is there, you have to give me this much. Okay. So those people are called as preference shareholder. Preference shareholder. Okay. And they get dividend before equity shareholders. First dividend is given to preference shareholder. Okay. Please understand, all the companies will have this. All the companies will have equity share. But it is option of the company to decide whether to have a preference share or not. Okay. Then more than that, you can go and borrow money from the bank. That is called debt, loan. Or you can borrow from the general public by giving a document. That document is called as debentures. Please understand, debentures. Debenture is a document given by the company which is borrowing money from the general public for a certain period of time at a fixed rate of interest. Okay, the document is called debenture. The money what they given is called debt or loan. The people who have given that money is called debenture holders. Debenture holders. For them, it will be a fixed rate of interest, some 9% or 7%, some rate of interest. will be
Who
there,
can
some
these
5%.
people be, sir? The other sources.
Sorry?
Can you give an example? Who can those people be? Other sources.
Anybody, you, me, anybody who has money. That's all. Are you asking something else?
You mean to say we can borrow money from financial institution?
That
Is
is
that
different.
termed as the debentures?
See. If you borrow money from financial institution, that's a bank or any non-banking financial companies.
That will become
That's
loan.
a loan.
Yeah.
It's a loan, just a loan.
So
Okay.
can you
For
just
that-
elaborate
for that-
debentures?
Yeah, both are different. No, both are different. That's what I'm told. The debt includes both, but loan taken from a general public is called debenture. Okay, loan taken from a bank is
How
called
do
just
they
a secured
announce
loan.
it, sir,
Or,
that they need that money? How do they announce it? Will they put it in the newspaper or something?
sorry?
They announce it that they need the money. Like, how do they contact the public? Like, how?
That you study in the next semester. If you take finance as a specialization, one word and one line I'll tell you. They just give an announcement in the newspaper after getting a due permission from the government called SEBI. There is a organization. This only regulates in India the entire flow of money from the general public to the companies. SEBI, Securities and Exchange Board of India, is an organization authorized, a statutory authority authorized by Government of India through an enactment called the Securities and Exchange Board of India Act 1992, which regulates the flow of money from the general public to any company for that matter. Whether it is a private limited company or a public limited company, does not matter. Flow of money from a public to a company is regulated by SEBI. Okay. After getting a due permission from SEBI, the issuing company who wants to collect money from the general public by issue of debenture will announce in the newspaper. Based on that advertisement, you or anybody who has money and interest to invest in that company's debenture should apply. You might have heard about this IPO, initial public offering.
Recently, Burger King.
Yeah, recently Burger company is there, no, and previously there are many companies have come up. Okay, even Amazon and Facebook, all those things. Initial public offering. This is for equity, or it is for debt as well. Okay, initial public offering. If you sell equity share, that is initial public offering of equity share. If you sell debenture, that is initial public offering of debt or debenture. Okay, that we will discuss in detail later. If you are taking finance, that is called financial market, how the companies are collecting money. Now, as an accountant, I should worry about how much money comes in, what I'm going to do with that in accounting. Okay, so one is equity, another one is preference.
Sir, hello.
Yeah.
Sir, what
Please,
about companies giving shares to their employees?
See, you give to anybody.
That will be debentures or how?
You are only telling it is a share. Then how it can be?
Sorry,
debenture?
yeah. So
that
even
comes under
equity.
Equity. You give to your father, you give to your mother, you give to anybody. See, private limited company will be in that category. Private limited company, only 5 members in the family, they will just share the share capital. So in that time also it's equity capital only. Okay. You give to anybody for that matter. What you are giving, that matters. If you give ownership, collecting money from them and giving them ownership, then it is equity share. If you collect money from them and you give a promise that I will give this money later, 5 years or 10 years, with this interest of every year 10%, that is called debt. If that is the case of institution, a loan. If that is the case of general public, that is called debentures. Okay. So why I'm explaining all these things is, this will come under liability side of a balance sheet. You remember, this is an equity. These two will be liability of a company. This is a very specific item of a company. This won't be there in a other business organization, other business ownership. Okay. Any doubt up to
Sir,
this?
yeah, sir, what's the difference between debenture and equity share, sir? Like it will be in debenture, it will be.
It's a owner. Shareholders or owners. They cannot get back their money from the company at all. Once given is given. If the company is wound up, if the company is having any money left out, that money is given to shareholder. Up to that, shareholder cannot ask the company, give back my money. But
sir, debentures has a fixed fixed rate of interest, sir. Debentures.
Yes. Not only fixed rate of interest, more than that, they are not the owner. They are just giving a money. They are just giving money and asking that money after some 5 years or 10 years, depending upon the contract. They are the creditors of your company. They are creditor, just a creditor. They are not owner. What's happening in your business? They don't worry. What business you do? They don't worry.
Whether
They
it
worry
will
about
be
only
for profit or loss, like regular rate of interest, it will be given to.
irrespective of profit or loss, you have to pay interest to them.
Okay, sir.
But in the shareholder, if you have only profit, that is shared by the shareholder. If it is loss, nobody will share that. Nobody will come and ask you, please give me some money. No. That's what ownership. You are owning the business. Business is performing better, you will get profit. If business is performing worst, you will get loss. You don't claim anything from the company at the time of loss. But debenture holders, irrespective of your profit or loss, the agreed rate of interest, in my example, it is 5%. I have to give, for 100 rupees, I have to give 5 rupees as interest every year.
Sir, debentures can we consider it as a banks?
Sorry?
Debentures can we consider as banks?
Debentures can be considered as?
Bank.
No, what you say? Bank is an institution. I told it's a document, no? Debenture is a document. See, just like a promissory note, you know promissory note? I am borrowing money from you. To evident that, you ask a note from me. You ask a signature from me. I am giving a note. I am so-and-so, son of so-and-so, residing at so-and-so place. Have borrowed this much of money from you for this many years at this much of rate of interest, which I will repay you on this date. I'm signing and giving to you. That's a promissory note. Same thing. The company borrows money from us, that gives a note. That note is called debenture. Debenture is a document. It's a paper. It's a deed. Debenture is a deed. It's a deed. The bank is an institution.
Professor, like mutual fund?
No, like mutual fund means what? What do you mean by like mutual fund?
There will be certain, no, in the sense, they will give 13%, 14%
Please don't
margin.
confuse yourself. Please don't confuse. It's simple. You are a businessman. You need money. You are borrowing from somebody. Mutual fund is altogether different. Okay. Mutual fund is different. This is different. This is possible for anybody. If you are a businessman, you registered your company, you want money. After getting permission from government, you are going to the public and asking, sir, I am so-and-so, I am doing this business. I have been in this business for this many years. I am this. You are giving all the documents in the advertisement. Or you are giving a prospectus. You are giving a book which contains all your detail. And requesting the people, requesting the investors, sir, if you have money, if you have belief in my company, please give it to me. I'll do business. I'll give you interest this much every year, and I'll pay back your money, total money, after this number of years. For that, if we give a document, that document is called debenture. The money what is coming to you is called debt, the loan. That's it, simple. A mutual fund is a company. Mutual fund is a company. That is a different story.
Sir, which means like if I borrow some 2 lakhs from local people and I'm giving a promissory note to them telling like I'll be paying the some percentage of interest. So that will be the debentures, right?
If you are a company and if you have taken that permission from the SEBI, then you taken not only from local people, anybody, that's a debenture.
Okay, sir.
Yeah.
Sir, debentures, are they transferable? Like, can I sell
Yes,
the
madam. Yes, madam. See, please don't deviate much from the main concept. I'll tell you. Yes, it is transferable if you are a public limited company.
Okay. Yes, sir.
Correct. See, we understood what is a public limited company. The document of any private limited company cannot be transferred to anybody. Freely transferable. It's not freely transferable. Okay. Debenture also same thing.
Okay. Thank you, sir.
If it is of public limited company, it is very much transferable. Otherwise, suppose you have taken a debenture for 5 years. You have given money for 5 years to the company. You want the money after 1 year. What will happen? The company will not give you within 1 year.
Correct.
It asks you to wait for another 5 years, another 4 years. That time you have to go to the stock exchange, Bombay Stock Exchange or National Stock Exchange. There you can sell this document to anybody who is willing to buy that. Okay, it is transferable, right?
Sure.
So now come to the main aspect of what is that? Financial statement. So all these ancillary things you have to just refer. in this document which is there. Okay, now come to the profit and loss account. This is the format of profit and loss account. A company has to prepare and publish it. It's compulsory. Not only for the company purpose to know the profit or loss, but also for government regulation, it need to be published, this document in open public domain. Especially in their website, this document should be there. So today after the class, in the afternoon, you please go to your own company. If it is a listed company, go to your own company or go to any company of your interest of listed company, check in their website, this document should be there. It's a publicly available document. Okay, right. Now we are going to prepare this document. As an executive, as a manager, I should know how these documents are prepared, how the statement is prepared, what are the items are there in the statement, what does it signify to me, look, how do I read that? Okay, all these things we are going to understand from this session. Okay, so profit and loss statement. This is for 1 year, prepared on a particular day, but the items, what and all we are having in this, the numbers, the values, these are all is for from 1 day to 1 day. Say for example, profit and loss statement for the year end day 31/12 or 31/3/2020. Okay, from 1st April 2019 to 31st March 2020, what and all happened in the business? Out of that, is there any profit or loss available to me? I'm going to check it. So it need to display both the years, current year as well as last year. Since it is our academic class, I just delete this. If you know one, you know the other one also. Okay. Last year we might have prepared, no? The same thing is displayed in the next column. The last year values. Current year values displayed in one more column. So we discuss only the current year. Right. So from the trial balance, please understand, to prepare profit and loss statement, we need trial balance. You remember trial balance we prepared in other class. We need trial balance and we need some information. Any information which is not recorded in the journal, ledger or trial balance. That is called information, or that is called adjustment. Some raw data, raw transaction. Trial balance is one which gives us the extract of the ledger account balances, and informations are nothing but raw transaction which has not entered into any of the journal or subsidiary book. Okay, which is happening today only. After preparing trial balance, I come to know one transaction. Those transactions are called as adjustments. With the help of these two, we have to prepare a statement called profit and loss statement. Please understand, those who have studied BCom, you have to prepare this statement only in this format in the exam. Otherwise, I will give you 0. In your BCom, you might have prepared in some other format. That is for other form of business organization. This is for company. Look at this word: joint stock company, Reliance Limited, HDFC Limited, limited companies, limited liability companies. In this format only. This is a mandatory format supplied by Indian Companies Act 2013 only. Okay, what are those formats? Basically, what is profit? What is profit or loss? You already know, no? What is profit or loss? In the very first class, I told you, income minus expenditure. Income minus expenditure. In this statement, we are going to compare the income of the business for 1 year with the expenditure of the business for 1 year in this statement. And the result of this is going to be profit or loss. Okay. First, are you with me? Is it okay? This is a format. Okay, serial number, particulars, note number. What is this note number? Suppose you are bringing an amount here, 10 lakhs. You are writing 10 lakh rupee here. This 10 lakh, how did you arrange this 10 lakh? That should be shown in a note. That note is numbered. That number is given here. Okay. The value what you are writing against each and every item might have been derived by adding or minusing something based on some logic. Where did you do that? How did you do that? That is being shown as a note. That note is numbered. That note number is being mentioned here. Clear? Note number. Okay. And then the amount. So basically income minus expenditure. So income is nothing but revenue from sales, revenue from operations. Your major business, major revenue. Suppose if it is a software developing company, revenue received from the clients for delivery of softwares, that is called revenue from operations. If it is a shoe making company, yes.
The owner or agent? You are the
Not owner or agent.
how about the rate?
Sorry?
Rent, no?
Owner or agent? What is the owner or agent? I don't get you. Please tell me now.
So I think the question is not asked for the class. It was unmuted.
Question is not for us.
Maybe. Yeah.
Okay, maybe. Okay. It is for because specifically she is telling owner or agent. No? See, for example, in trial balance, you are seeing an item, sales revenue, or simply sales. That sales is nothing but revenue from operation. That amount should be written here. Okay. How much you taken as revenue from your customer, whether you received in money or not does not matter. It is there in trial balance in the name of sales. That will be written in this. Revenue from operation is nothing but total sales made by the company minus any sales return in the company. Sales return in the company. Okay, sales return. So that's I'll tell you by taking some number. Sales revenue. Then other income. Other income is nothing but any income which is not your core income, which is not your major business income. Okay, you might have received interest from the bank for a deposit what you kept in the bank, or in the savings account you might have received some interest, or old newspaper you might have sold. Okay, or any other thing which is not a core of your business. See, for Dayanand University, collecting fees from the student is a revenue from operation. Okay, collecting fees from the participants for a program which is organized by the Dayanand University on a particular day. Suppose a budget is prepared and presented in the parliament. On that day or the next day, university is conducting a debate or some program. For that, it is collecting some entry fees from the students. Anybody can come and attend, not only from the college student, I mean existing college student, anybody from outside. Okay, the money collected from them is not a revenue from operation, because the university's main business, I mean main function is not to conduct some debate or some kind of awareness program. That is partial, that part and partial. Okay, revenue from fees is revenue from operation. Such fees collected from the participants of a particular fest or particular program is called other income. Just an example. Just an example.
So similarly for a
selling
organization,
of
yeah.
revenue from operation. Selling of old machines, selling of old equipments. If you receive any income or interest, best example is interest received from a bank. It's called other income for a company. Okay, so these two are constituting your total income. Where I will get this, these two will be received from trial balance. These two will be noted from, taken from trial balance. Okay, then that sum of the two is total income. Then all expenses one by one. If you are a manufacturing company, cost of material consumed will be there. What is cost of material consumed? The material left with you in the beginning of your accounting year plus material purchased minus materials unused at the end of the period is called cost of materials consumed. Okay, if you are a manufacturing company, this will be there. No, sir, I am not a manufacturing. I am just a trader. I am buying and selling. Then you will have to record from the trial balance how much worth of goods you bought. That's called purchase of stock in trade. Purchase of stock in trade. You are a vendor. You are just a vendor, buying and selling. Okay, so the purchase, cost of purchase of goods will be written here. I repeat again. If you are a manufacturer, cost of materials consumed, opening stock of raw material plus purchase of raw material minus closing stock of raw material is equal to material consumed. Okay, if you are not a manufacturer of anything, you are a trader, then you have to record how much you purchase the goods. Okay, next, change in inventories. What is change in inventory? Change in inventory means opening stock of stock in trade, finished goods or work in progress minus closing stock of work in progress, stock in trade and finished goods. Last year, you left out with some goods which is unsold. Either you are a manufacturer, either you are a trader. Irrespective of that, you are left out with some finished goods unsold. That's opening stock. Current year also you are left out with some goods. We cannot compel all customer. You go on come and buy all the materials. We are going to close our books of accounts. We can't say. On any given day, goods are left out with us. So the change in inventory means opening stock of finished goods, opening stock of work in progress, opening stock of stock in trade, minus closing stock of all these three. How do I know these three items? I have to refer the trial balance for this. Closing will be there in the adjustment, opening will be there in the trial balance. Okay. Next, any expenses what you pay to your employee, salary, bonus, wage, anything, irrespective of the name, if you give to your employee, that is called employee benefit expenses. In the trial balance, you might have recorded salary, wage, bonus, PF contribution, everything which are related to employee, that will come under one heading called employee benefit expense. You have to prepare a small note, employee benefit expense. Under that, one by one, you have to write then amount, total it, bring that total amount here, with the note. Okay. Then any finance cost. What is finance cost? Interest paid. Three possibilities of interest payable. One is to bank, to debenture holders, to any other financial institution. Okay, finance cost. Interest paid. Finance cost is nothing but interest paid or bank charges. The bank will charge something for your current account. The bank will charge some commission on your DD, on your account maintenance, annual AMC, annual maintenance cost, or check dishonor cost, something which is paid on any of your finance. That's called finance cost. All the total of that will come under here. Okay. Next, depreciation. The value of fixed asset used for that particular year is called depreciation. That will come here. It will be given in the question. In trial balance, there may be a building costing rupees 1 lakh. Say for example, building in trial balance, you are finding a value of 1 lakh. And there is a sentence in the adjustment, provide depreciation at the rate of 10%. Then you have to calculate 10% on this 1 lakh, that is equal to 10,000. That is to be written in depreciation. Suppose there are 4 assets, 4 depreciation will be there. Calculate 4 separately like this. Bring that all 4 together in a small note. Bring the total here, depreciation, with that note number. Are you getting the points? Yeah.
Yes, sir.
Except this A, B, C, D, E, except this A to F, any other expenditure if you find in the trial balance, if the company has made it, suppose donation given, okay, or advertisement expenses, or goods given as free sample, or anything, any expenditure apart from this A to F will be written separately in a heading called other expenses. So I have to prepare a small note with the heading of other expenses. In that I have to write one by one all the expenses in the trial balance. Okay. And then I have to sum it up.
So can you please elaborate the term amortization?
Sorry?
What is the meaning of amortization?
What is the
meaning of amortization? Explains the depreciation and amortization.
Depreciation is an expense, yeah.
And amortization?
Amortization, see, okay. Amortization, okay, I forgot to tell you. Amortization is nothing but depreciation of intangible asset. See, building is tangible asset. On building, if you minus anything, that is called depreciation. On patent, on trademark, on copyright, if you minus anything, that is called amortization. Both are same. Depreciation and amortization both are same in the sense that is the reduction in the value of asset. If that asset is of fixed, physical asset, the tangible asset, it's called depreciation. If it is of intangible asset, it's called amortization. That's all.
Okay.
Okay. Suppose you've taken a patent for 10 year by paying 10 lakh rupee. Every year 1 lakh is going to be used by you. So that 1 lakh is called amortization. Both together you have to bring it here. Now all these put together, total expenses. A to G, total expenses minus from the income, minus from income. So this is nothing but 3 minus, can you say 3 minus 5 is equal to your profit before tax. Then if there is any tax payable to government of India, that is to be minused to find out my profit or loss of the company. Okay. So this is what profit and loss statement. Okay. Same thing. I have given explanation here. You can read it. Okay. Come to the balance sheet. Since we already touched upon the balance sheet, I'll take 2 minutes before we go for a break to explain the balance sheet. Look at this. This is a balance sheet. Same. Company is required to present the item for 2 period of time. Just a comparison. Okay. In real time, they will prepare for 2 years. From last year, they just bring the amount and they will put it here. This is the current year here. Okay. Look at this. In accounting equation we discussed now. In that time also we have discussed about the balance sheet. Equity and liability. That's roll number 1. Roman number 1. Under that, shareholders fund. Shareholder fund is nothing but the initial capital introduced by the shareholder. Reserves and surplus means the profit earned by the company till now. It is not 1 year, till now. Okay. Then you don't want this, you leave it. Okay. Then non-current liabilities. You remember when I was explaining you assets and liabilities, I told you non-current liabilities are long-term liabilities. If your company is having any such kind of long-term liabilities, you have to check in the trial balance. From that, you have to bring it here. I repeat again, trial balance is the starting point. It's a base for preparing a financial statement. One is balance sheet, another one is profit and loss account. In the trial balance, many items will be there. If it is of assets and liabilities, bring those items to balance sheet. If it is the nature of income and revenue, bring those items to profit and loss account. I repeat again, trial balance the base for preparation of financial statement. Trial balance will contain all the ledger balances. You have to use your understanding of all those items, whether it is of liability or asset, or if it is of income or expenditure. Income or expenditure, blindly take to income statement. If it is assets and liability, take them to balance sheet. After deciding that, you have to categorize them into these headings. Okay. So all these liabilities, okay. Then current liabilities, the total of that. Okay. Then assets. In asset side, we have fixed asset, tangible fixed assets. A fixed asset means non-current asset, long-term assets. Then current assets. Pick all those items from the trial balance, just to put it here in the respective sentence, respective statement. Suppose you have investment in the trial balance, current investment 10,000 rupees. Bring that 10,000 and write it here. Cash in hand, if you are having cash in hand, you bring that cash in hand and put it here. Cash in hand. Okay, cash in hand. Or cash at bank. All those things will come under this. The total of assets should be equal to total of liabilities and the equities, which we are going to bring it here. Okay. So this is the format. We take break for 5 to 10 minutes. Then we'll prepare one question based on this. Okay.
Okay, sir.
Yeah.
So till what time we have break?
11:20 we'll join again.
Okay, sir.
Yeah. Thank you. So are you all there? Can you resume?
Yes, sir. We can.
Sure, sir.
So any doubt up to this from the format of profit and loss account and balance sheet? I repeat once again.
Professor,
Yeah.
Professor Martin here. Do you mind if I ask you one question related to the previous section on assets, liabilities, and equity?
No problem.
Okay. This is also related to the assignment that we have on section 1B. It says write down the new accounting equations with all possible details for each transaction one after another. I'm not able to understand that. Okay, would you be able to explain that just with one example, just once? Write down all accounting equations with all possible details for each transaction one after the another.
You understood this?
The assets, liabilities, and equity, that's very clear, sir. That's very clear. There is a second question which says list down all items available in the business under assets, liabilities, and equity, and this answer goes into that. That is fine. There's a previous question which says write down the new accounting equations with all possible details for each transaction. Are you saying it's both combined? Same, is it?
This is the transaction.
Okay.
These are each and every items you return.
Oh, that's what you mean. Okay, got it. Okay. So it's one question, but broken into two.
Yeah.
Okay, got it. I'm clear. Thank you.
Yeah. Yes. Anything else?
And I'm fine on that, Professor. Thank you.
Yeah, thank you. Anybody else?
So you had one more question, like we need to cite the references with APA format. Like I'm not clear very much on that, sir.
Try to be clear. Google it.
So after writing the definitions and the introduction and everything, then we need to write the references, is it?
Normally, references will be written in last, right?
Yes, sir.
Normally,
yes.
Suppose you are writing 10 page. After 10 page is over, you have to write the references, right? In that
Yes.
time, you have to follow that format. That's what I told.
Okay, sir. Okay, thank you.
Please just a little Google it. That's not accounting. That's if you submit any report, that's a common, that's a general one. You can Google it. Anything else? Not related to exactly about the assignment topic, but also from the discussion what we have done. You are going to do a balance sheet and you are going to do a profit and loss account. For that, any doubt?
Professor, have a discussion for last 10-15 minutes, depending on the time regarding
Yeah, no problem.
regarding the assignment. Can we just have a short discussion at like 10 to 15 minutes of time in the end of the class? Like
we can.
Yeah. Thanks. Yeah.
Okay. So right. So we are now going to prepare the financial statement. Please understand financial statement. Financial statement includes two. Okay. One is, so this is the real-time statement. You see, this is the statement taken from, there is a company called Ramco Cements Limited. Ramco Cements Limited, it's in Tamil Nadu. It's a listed company. So I just taken this statement. This look like this. Quarter ended, year ended. This nothing but every quarter they will prepare. But that is not getting audited. Okay. But at the last, it is getting audited. Process is the same. The items, everything is the same. But the timing is different. Every quarter, every 3 months once, if they prepare, it's a quarter. Okay. Once in a year, if they prepare, it's an annual. But normally, it is mandatory for quarter also and annual also. We are trying to do annual. Okay. Right. So if anybody wants to have a look at your company's financial statement, I request you to go to any of the companies, whether you are working in that company or if you are liking that company, go to that company and you can download this and you can see. It is mandatory, it will be there. Okay. Now, let us try preparing one of such balance sheet and one of such profit and loss account. Okay. I already told you to prepare this financial statement. Repeatedly, I'm telling you, financial statement refers to statement of profit and loss and balance sheet. Okay, statement of profit and loss and balance sheet. Okay, to prepare this, I need trial balance. Without trial balance, we cannot prepare this. And there are some adjustments will be there. There are some additional informations which are raw data, actually which are raw data. Adjustments are nothing but which are raw data which have not gone through any of the process of accounting. Okay. So adjustments in the form of statement, say for example, closing stock, okay, or depreciation, or interest payable, rent payable, like that some items will be there. Okay. So from trial balance, you will have to identify assets, you will have to identify liabilities, and you will have to identify expenses, and you have to identify income. If any item what you find in trial balance is of income and expenditure nature, that need to be immediately taken to profit and loss account, a statement of profit and loss. That's a simple idea. And then if you find an item in trial balance, if that are in the nature of assets and liabilities, that need to be entered in balance sheet, that need to be taken to balance sheet. Clear? First basic, you have to understand this. Okay, this basic. Okay, assets and liabilities, income and expenditure. Right. Next, adjustments. What is adjustments? I told you it's a raw transaction. What is the raw transaction? It has not gone through any of the accounting process. Okay. So if there are such transactions, it need to be recorded in two places. Why it is to be recorded in two places? Because it's a raw transaction. It has not gone through any accounting process. Each and every transaction has two aspects. In journal, you are writing both aspects. Suppose sold goods for cash. What's the entry you are writing? Cash account debit. Cash account debit to sales account. That's what you will write it, right? In the journal. In the journal, you write like this. But the entry in the adjustment has not gone through any of the journal ledger. So directly I am bringing them, giving effect in the financial statements. That is why that need to be recorded in two places. One may be in debit side, one may be in credit, or one may be in expenditure side, another may be in income side, like that. So two places. We will discuss that in detail by taking an example. But this much you should be keeping in mind to prepare the financial statement. Financial statement, I mean two. One is balance sheet, another one is income statement or profit and loss account. Income statement, profit and loss account. Both are one and the same. Profit and loss account. These two are the financial statement. At any point in time, if anybody is asking you financial statement, you should be able to tell these two. Balance sheet, which gives us an idea about the assets, liabilities, and equity of a business on a particular point in time. It's called balance sheet, which is helping us to know the financial position of the company. What are the assets are there? What are the current assets? What are the current liabilities? What are the equities are there? What is the capital? What is the additional retained earnings? Okay. What is the other liabilities? Current liabilities and non-current liabilities. A picture about this is being depicted in a statement. That statement is called balance sheet. Okay. And then profit and loss account is nothing but a statement which compares the income of the business and the expenditure of the same business over a period of time. To know the profit or loss. If income is more, profit. If expenditure is more, loss. So it is done in a systematic way. So these two are the financial statements. To prepare this, I need a trial balance. In the question, it will be given to you. So far in the previous class, we learned how to prepare a trial balance. Okay. Trial balance is given to us, and some raw transactions are given to us. With the help of these two, I'm going to prepare balance sheet as well as which one? Profit and loss account. Okay, balance sheet and profit and loss account. In trial balance, a careful scrutiny by you should reveal the different items which are belonging to assets and liability category. Take those items and keep it ready to record it in the balance sheet. Example for assets and liabilities: land and building, stock, motor car, motor van, delivery van, machinery, plant, equipments, cash, cash in hand, cash at bank, investments, fixed deposits. All these things are example for assets. Liabilities example. Liabilities example. Okay. When I say liability in this context, it includes equity as well. Okay. So capital, retained earnings, profit and loss account of the last year. Okay. And then a loan taken from the bank, creditors, outstanding expenses. All these things are example for liabilities. Bring all those things to balance sheet. The left out items should be of income and expenditure. Take those items to profit and loss account. Okay. Then adjustment items will find place in minimum two places. Either one may be in profit and loss account, another may be in balance sheet, or one may be in profit and loss account credit side, another may be in balance sheet, like that. Okay. I will teach you that in detail later. But this is a basic understanding. Without knowing this, we cannot proceed further. Okay, right. Now this is the trial balance. Look at this. This is a trial balance given to you. From this trial balance, I have to prepare profit and loss account. You are given the following information from the books of Siraj Company Limited. Look at this. This is there means it is a limited liability companies. Siraj Company Limited. Private is not there, so it's a public limited company. Siraj Company Limited. These two words are very important to know what is the nature of the ownership of the business. Company Limited. Okay. So it's a limited liability company. As on 31st March 2019. Okay. Now this is a trial balance given to us. It's a trial balance. From this, we have to identify what? We have to identify the assets and liabilities, income and expenditure. Okay. So look at this first one. Depreciation on premises. Is it asset or liability or income or expenditure?
Expenditure.
Expenditure below the line.
It's expense.
It's an expenditure. So we have to take to
Profit and loss
we have to
account.
incorporate this item into
Profit and loss account.
Profit and loss account. We already studied in the before break. We already studied the format of profit and loss account. Look at this. This is a format of profit and loss account. Okay. I just take this format. Okay. You remember this format. This is common for all the questions. This format is common for all the questions. If such items are not there, you leave that blank. That's all. You leave that blank. Okay. Otherwise, you fill that item. Now, depreciation. It's an item in profit and loss account. I don't know how many depreciations are there. Only one means I can write directly. If there are more than one, look at this. There are more than one depreciation. So what should I do? I have to prepare a small note. Look at this. I am preparing a small note like this. Okay. What are the different amount in depreciation? I am preparing a note. Okay. I am giving a note number later. Okay. Note number later. Now, under a heading called depreciation and amortization, I am preparing a small note by bringing all the depreciation in the given question. This is a question. Okay. So I am writing this depreciation 8,000 rupees. I am bringing this and I am writing it here. Depreciation. Okay. Likewise, if I take an item, I just tick in pencil. If you are doing manually, tick it. Next, materials consumed. What is this? It's an expense. Materials consumed is an expense. You know the format. You have to remember this format. Material consumed. There is a subcomponent under the expenses title. There's a subcomponent of material consumed. I bring this material consumed. How much it is? Material consumed is 8 lakh. If it is not given, I have to calculate. How do I calculate material consumed? Opening stock of material Opening stock of material. Write it here.
Plus stock
If it is
purchase minus
given, I
closing
take
stock.
directly. If it is not given, I have to calculate opening stock of material plus
Stock purchased.
plus materials purchased. Materials
Purchased.
Purchase of raw material plus purchase of material. Purchase of material minus
Closing
minus
stock.
closing stock of material. Closing stock of material. Closing stock of material. Okay. Closing stock of material. This is the way in which you have to calculate materials consumed. But in this question, they have given material consumed directly. Material consumed 8 lakh. So I take it material consumed 8 lakh. Material consumed 8 lakh. Materials consumed 8 lakh. Materials consumed 8 lakhs.
Sir, sorry to interrupt. Will you provide this, will you upload the statement in the LMS, sir, for our future reference, sir?
Yes.
Thank you.
Okay, materials consumed 8 lakh. Next, opening stock is there. Opening stock of 40,000 rupees. Okay, what is this opening stock of 40,000? Okay, it could be a
asset.
Stock in trade of opening stock of 40,000 rupees. What should I do this 40,000 rupees?
That's an asset.
This 40,000 rupees is to calculate change in inventory. You remember we discussed a concept called change in inventory. Change in inventory. Opening stock minus closing. Don't confuse with these two things of opening stock and closing stock. Opening and closing. This is opening stock of material. This is material. Raw material. Okay. This is opening stock of stock in trade. Opening stock in trade.
Inventory.
What's the difference between that and this? This is the material what we buy and convert it into finished goods. This is the one what we buy and sell it as it is. Suppose if you are a vendor of laptops, okay, opening stock in trade is nothing but the value of the opening stock of laptop with you. Okay, if you are making the laptop, for that you are buying some peripherals, that all those inputs are called as materials. Are you getting my point? Opening stock of goods in trade. Stock in trade is nothing but finished goods. You are buying and selling. Some companies will do both. They will also manufacture, they will also buy from outside and sell it. Okay. So opening stock and closing stock is used to calculate the change in inventory. Change in inventory. Look at this. Change in inventory. Change in inventory. This is change in inventory. What is change in inventory? Change in inventory is nothing but opening stock of all minus closing stock of all, excluding the raw material. What is all? All means finished goods, what you produce, work in progress, what you are having, and the stock, what you buy for trading. These three things put together is called opening and closing, other than raw materials. Okay, inventory, here inventory does not include raw material. Please understand. This change in inventory does not include raw material. Then where is that raw material opening and closing gone? Opening and closing of raw material is used to calculate
Cost of consumption.
It's already calculated and given to us, so we are not worrying about this. Okay. Next, salary. What is salary? What you do with salary?
Expenses.
It's an expense. It's an expense. Expense relating to employees. So there is a column in the format. Employee benefit expense. Look at this. Employee benefit expense. So I create one small note called employee benefit expense. Employee benefit expense, and I'll bring all the items relating to employee benefit one after another. Now I bring salaries first. Okay, 1,14,000 rupees salaries. Next, look at this. Salaries over bad debts. What is bad debt? Bad debt is nothing but the irrecoverable amount from the customer for the sales what you made is called bad debt. It's a loss to the company. So what to do? In the format, we have material consumed as an expense, purchase, change in inventory, employee benefit expense,
Other
finance cost,
expenses.
depreciation. Where will you bring this?
Other expenses, sir.
Other expense.
Yes, exactly. It should be in other expenses. So I'll create one more note called other expense. Then I'll bring this other expense. I'm writing that bad debts.
Sorry to
What is
interrupt.
the time balance?
Sorry.
3,800. I'm bringing it.
Bad debts, do we have any timeline for creation of bad debts?
Yeah, it depends on the company. You can wait for 3 years, not considering that as a bad. Some company may do. Some company within 3 days they take it as a bad debt. It depends upon the company's policy.
Policy. Okay.
Yeah, but you don't worry about that. That's what we're doing. Now we are in the elementary level. You please understand, we are not just doing an executive role here. We are just understanding the basic aspect of entering what my management is telling. That's what we are doing. Now, the analysis of this 3,800 will create a sparkle in the minds of the management. Why this year it is 3,800? Why last year is only 3,000? That is a policy decision. Okay, here as an accountant, you just write what the management has decided as a bad debt. But based on the records of 10 years or 5 years, the management will review why this much of bad debt every year increasing or decreasing. What is the policy of our company? Of course, that's a second level of medium level or high level management. Okay, of course, time is there. But if it is given in the question, we take that as the amount. Okay. Next, bonus to employees. What is the meaning of this bonus to employees? Up to 31st March 2019, from the date of 1st April 2018, the total amount paid by the company to the employee as bonus is 20,000. That's the meaning. Trial balance means summary of 1 year balances till now. Okay. So what do we do? What do you do with this?
Employee benefits.
Employee
It will
benefits.
go to
Employee
employee
benefits.
benefit expenses. Employee benefit expenses. I have to write it in employee benefit expenses, bonus to employees. How much amount is there? That amount I write it here in a small note. Small note. Okay. Next, interest on loan.
Expense.
It's an expense. Definitely it will go to profit and loss account. That's for sure. But under what heading? Look at this. In profit and loss account, we have two headings for income. And these many headings for expenditure. Okay. Under expenditure, we have a lot of sub headings. Expenditure. Under what heading interest paid will be an expense, will be recognized?
Finance cost.
Finance
cost. Finance cost. Yes, exactly. So I am preparing one small note for finance cost. Okay. Or if it is only one, I can directly write it. Okay. If it is only one, I can write it directly. Finance cost, how much it is given in the trial balance? 16,000. There is no other interest on loan. So I directly write it 16,000 rupees as finance cost. 16,000 rupees. 16,000 rupees. Okay. As finance cost. Okay. Next. What is another item? Depreciation on machinery. You remember already we have created a small note for depreciation when we are discussing about premises.
Bad debt.
Go there and add that depreciation. Already we have one depreciation on premises. Now we are adding another one depreciation on machinery also. So totally it is 18 plus 8, totally 26,000. Are you able to understand this note? There were two items pertaining to depreciation and amortization. Both I listed one by one and I added the total 26,000. This total need to be brought down to the profit and loss account under the heading called expenses in the name of depreciation. 26,000. 26,000. Okay. Any doubt in this? If the amounts are not given, suppose the depreciation amount is directly given here. Look at this. Depreciation is given here, 18,000 rupees. Suppose sometime they will give you after the trial balance. This is trial balance over. After the trial balance, they will tell you depreciate machine at the rate of 20%. At the rate of 20%. At the rate of 20%. If that is the case, we have to calculate the depreciation. This is called rate of depreciation. We have to calculate amount of depreciation. How do you calculate amount of depreciation? What is the value of machine? You have to see in the trial balance, the value of machine is there. Look at this, 6 lakh is there. On 6 lakhs, we have to calculate 20%. Okay, that will become the amount of depreciation that need to be recorded in the note of depreciation, that need to be added with other depreciations if any. Then we have to bring that one to profit and loss account in the name of depreciation and amortization under the heading called expenses. Am I clear?
Yes, sir.
Next item, conveyance. It's nothing but conveyance charges. Conveyance charge. What is this? Asset or expense or income or liability?
Other
Expense.
expense.
Specifically, it's an expense.
Other
Specifically, it's another
expenses.
expense. So go to other expense column and add this 4,000. Other expense, conveyance, 4,000. Okay. Next, I just refer one by one. Loss on sale of machinery. Loss on sale of machinery.
Other expense only, sir.
Other expense. Loss on sale of expenses. Loss on sale of machinery is other expense. Okay, 20,000 rupees. Next, insurance. The amount what I paid for insuring my properties or insuring my stock or insuring anybody. Insurance premium. What is this? Expense or
Expense.
Expense.
Other expense only.
so other expense. Other expense. Insurance, other expense. Then sales return. What is this? Sales return.
Come.
Is it income?
It's a loss.
Loss.
Is it loss?
Loss on sale of
What is
goods.
Returns.
Or
Neither a loss nor a
Return,
income.
yes, loss.
it
It
can
should
be
be
a
minus from sales. That's all.
Yes, yes.
We already
Hmm.
have a sales amount of 12,40,000. We sold for 12,40,000. But there are some customer came back to us and returned the goods. Returned the goods what rupees? What rupees?
40,000.
40,000 rupees.
Bad debt,
So
sir.
net sales.
This is
So
bad
net sales
debt.
will be 12 lakhs.
Bad debt.
Should be?
No, it is not a bad debt.
Minus.
Please understand, madam. It is not bad debt. They are coming to you and handing over your goods. Sir, please take back your goods. We don't want your goods. It's not good for us. It is not up to the mark. We asked something
Yeah.
else, but you
Is
have
it
given
stock
to us
in trade
something
goods?
else.
Deduct from the sales.
Purchase
It is to
return.
be? It is to be?
Stock in trade Deduct goods. from the sales.
Should keep it, take it under expenses.
Added to materials material.
Simple. You already recognized it as a
Add back to
sales.
material.
Now you have to take back from that. Sales is not there. So it is
Yes.
only 12 lakh is sales.
You have to
Sales
correct.
minus net sale. Sales minus sales return is going to be your net sales. Sales minus your sales return is going to be your net sales. That is what it is done here. Sales minus sales return. Look at this. Sales minus sales return. If sales return is not there, my total revenue is 12,40,000. Since there is so it's not a loss. You can sell to somebody else. They have come back and given you the goods. They returned your goods. Sir, I bought for 1 lakh. But 40,000 worth of goods are not up to the mark what I ordered. So please take back your goods. Okay. So that is just minus from sales to know
Sir,
our net revenue. Yeah.
it won't get add back to the stocks.
See, if stocks are not considered, that it need to be added back, but normally it has been considered. Normally it will be considered. Okay.
Since
If it is
goods are
mentioned
returning
for you, suppose it is mentioned for you, it is already there in the trial balance. No, it is already there in trial balance. So it's already posted in the ledger. It is already posted in the journal. So no need of considering that as stock. If it is given in the adjustment, suppose here they are telling you, adjustment. There are some additional information. Please consider that also. Then point number 1, they are telling there is a sales return of 40,000 rupees from the customer. Then you have to minus from the sales and you have to add with the closing stock.
Okay, sir.
Next. So this is nothing but the sales revenue. So sales revenue is going to be 12 lakhs. Sales revenue is going to be 12 lakh. How it is 12 lakh? From the note number 1, I found out. How I found out? Sales minus sales return. Okay. 12 lakh. All right. So that has come here. 12 lakh. Next item in the trial balance is provision for tax. Provision for tax, we have a separate column for that. Heading called provision for tax. We have to write it there. Provision for tax. After all expenses, please understand, tax is not an expense. Tax is out of profit. If no profit, no tax. So after minusing your total expenses from the total revenue, if you have anything that is called profit, on that you have to minus this provision for tax. How much it is? 60,000. So I have to take 60,000 here. Provision for tax. Provision for tax 60,000. I'm just taking it here. Provision for tax. Provision for tax 60,000. All right. Next. What is there in the machinery? What is machinery? Machinery is an asset or liability or a
Asset.
Asset.
It's a fixed asset.
asset. So should I consider it here in the profit and loss account?
No, that's going to buy a
No,
balance
no,
sheet.
in balance sheet. In balance sheet.
Balance sheet, I have to show it in the asset
Machinery
side.
was liability, sir. In
Sorry?
the balance sheet.
No, no, it's an
It's a
asset.
fixed asset
Balance
on
sheet
the
is
asset side.
3 items now.
That cannot be liability.
If it is credited,
It's a fixed asset, machinery.
Correct. Machinery asset.
It's an
if it
asset.
is credited, then it is liability, right?
Balance sheet is an asset, right? Sorry, machinery is an asset. So it will go to balance sheet. Any doubt on that? Okay. So next, PF contribution.
Employee benefit.
Company
Other-
paying some
Other
amount.
expenses.
Other expense.
It is other expense.
It's a
Employee
liability.
benefits, sir.
Employee benefits.
Employee benefits.
Employee
It's
Employee
employee
benefits.
benefits.
So
Employee
go to
benefits.
employee benefit expense and write it. Employee. Employee benefit expense. PF contribution. Employee benefit expense. Now, done. Next is there in the trial balance. Premises is
Assets.
assets. So it will not come under
Balance
profit and
sheet.
loss account. It will go to balance sheet. Computer,
Asset. Balance sheet.
balance sheet. So one
Yes.
side of the trial balance is done. Come to the next side.
Sir, we can't hear you.
Exactly. I thought my connection is.
Right, right. Sir, your internet is probably slow. We are facing disturbances.
Screen also stuck there only.
Yeah, yeah. I was thinking that it was from my end.
Sir, we can't hear you, sir.
He has got disconnect. He might reconnect soon.
Yeah, are we connected now? Are we audible now?
Yes, sir.
Yes, no, sir. We are back now. Yes.
Yes, sir.
So sales is done. Sales is done. Next one is equity share capital. Equity share capital. Equity share capital is income
Balance
or
sheet.
expenditure or asset or
Liability.
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 To be more specific, it is an equity. Okay, so it's a balance sheet item or profit and loss
Balance
account
sheet.
item?
Balance sheet.
Item.
Balance sheet liability item.
Outstanding wages.
Liability.
Expenses.
Asset. That's a liability.
It's a provision
Liability.
indicating in the books.
It's a liability. Outstanding wages, liability. Okay. So that's all. We have taken all the items from the balance sheet and we have recorded in the various places. Now what should I do? I have to bring all those note what I prepared to the balance profit and loss account. Note I prepared. Okay. Depreciation note I prepared. Okay. And then I prepared several note. Okay. Several note. It is there one by one. I have to bring all those note here. This 12 lakh I already brought. See this 12 lakh. Note number 1. Revenue from operations I brought it. Next. Note number 2 I prepared change in inventory. Opening stock minus closing stock. So 40,000 is the opening stock. Closing stock, it should be here. Okay, closing stock, it should be given here. Closing stock. I just deleted it, I think. Closing stock of rupees. Closing stock of rupees 1,20,000. 1,20,000. Closing stock will be always after the trial balance. Will be given next to the trial balance. It will be given the adjustment only normally. Okay, because we will not know how much closing stock when we prepare trial balance. We will take a physical verification, then we will come to know what is the closing stock. So 1,20,000. So this 1,20,000 is used here in the calculation of change in inventory.
That is basically
So 40 minus 1,20,000 is equal to minus 80,000. Yeah. Minus 80.
Considered
So this is,
basically out of the book, sir. Closing stock.
sorry, sir.
The closing stock is considered out of the book. Only taken as
Not
an
out of
adjustment
the
entry.
book, it is out of the trial balance.
Okay.
See, normally these are all financial accounting statement what we see so far. There will be some record. See, stocks are very important. No, somebody may steal it or somebody may take it and go. Some wastage will be there. To control all those things, there will be a separate record called bin card. The store department will maintain that. That's not accounting record. Just to have a record of how much stock they have. So all of a sudden, the production department should not run out of stock, run out of materials.
Sure.
Or the sales department should not run out of stock in trade. So to maintain that, there will be a record. That record shows the quantum of stock in the company. Sales minus, opening plus purchase minus sales, the closing will be there. Okay, that record will be used to find out how much stock is there. So from that record, it is coming to us.
Sure, sure.
Closing stock 1,20,000. So totally the materials, change in inventory. Change in inventory is going to be the difference between opening and closing. That is equal to 40 minus 120 is equal to minus 80. Clear? Minus 80. Minus 80 is change in inventory. Minus 80.
Professor, how to show that goods in transit?
Yeah.
Goods in transit.
Goods in transit will see. Goods in transit is your asset. No, goods in transit is your asset.
Yeah, you are paid already for that. How you account that?
You tell me what is happening actually. You ordered goods and it is paid.
Yes.
And goods not yet reached to you.
Yes.
So it will be an asset to you. Goods in transit should be shown as an asset.
Okay. Okay, sir.
Can we show as an advance pay to the vendor and do not record the transaction because it has not reached my warehouse?
No. Goods are in transit now. How it is an advance now? You already bought it. It's in transit.
Yeah, made the payment to the vendor, but still the goods has not reached my warehouse. I cannot record that, right? I only can record a transaction which says I've paid XYZ value to the vendor.
So who says this? You cannot record and you can record. Some principle should be there now.
See, in the company, only when I record a transaction when it's my warehouse.
Huh?
Can
You're
we take
recording the transaction only when?
When it delivers my warehouse.
Eventually it will reach.
You might have kept your warehouse in US. You are buying from India. Once it is dispatched, that's over. That's your product. If it is lost, who is going to claim the insurance?
No, no, no. It is a product which I'm buying from my vendor. If I'm placing.
Okay, man, you are buying from your vendor only. From whomever you are buying, that person is called your vendor. You are
Correct.
buying.
Correct.
You pay the money, you did not pay the money, does not matter. Once the contract is effected, you are
Okay.
the owner of the goods now.
No, 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 sir. But if if it's lost in the transit, okay, but I made an advance payment. Why should I record the transaction and add my inventory? I can just show as the advance pay to the vendor and show as a debit balance in the creditors account.
Purchased or not?
That's the question. Yes.
PO is raised and against the PO.
Invoice raised, that's it, done, over. Invoice raised means that goods is yours.
It's an assumption, right? But
Not assumption. Arey, what is an assumption? If suppose you are there in Mumbai, I am in Bangalore. You called me and told I want these goods. Okay, you are my customer. You did not pay the money. Not even one single paisa advance you did not pay. I know you, you know me. That's all. Now I am effecting the transaction. Okay, sales is made. Bill is raised. Invoice is raised in your name.
yeah, I'm talking about not sales. I'm talking about purchase here. If sales is done, I understand.
Now you are the
sir,
but
please
now you are
understand.
the
For
owner
you-
of that good.
No, no, no.
You are the purchaser. I am the seller, right?
So now I'm talking about this particular manufacturing concern where you are preparing this financial statement.
Yes.
Okay. I have done an advance payment to my vendor
Okay.
to procure some goods.
Okay.
On 31st of March, I have made a NEFT transaction.
You paid money.
I paid money. I raised a purchase order and I paid a money.
Okay.
It will have a financial impact only when I receive the goods to my facility or to my warehouse.
Now the goods is not in transit. Please understand. 31st March, you paid the money.
Yes,
You placed the order and paid the money.
correct.
Goods is going to be dispatched tomorrow, day after tomorrow, we don't know. In that case, goods in transit not at all arises.
If it is even done on 30th of March also.
Wait. Our discussion is about goods in transit. Payment was paid in some day or not paid does not matter.
Correct.
I ordered. I raised the invoice. It is coming. It is in transit. Look at the word. Goods are in transit.
Correct.
From Mysore to Mumbai, it is to go. But it is in Bangalore today. I am closing my books of account. That time, that's a stock for me. Okay. Now you are raising another context. 31st March only you are paying the money. NEFT you made.
Yes.
Now invoice is made. Today evening or tomorrow morning they are making an invoice. Or already they made an invoice the morning today. It is not transported. It is still there in the place of the vendor. That time it is not your goods. Terms of agreement should be noted here clearly because there are a lot of issues in this. Suppose the goods are just coming out from the vendor place and there is a theft or there is a fire occurred. The goods are lost. Who is going to claim the insurance?
Vendor.
Either the buyer or the seller. That gives the ownership of the title of the goods. If you are eligible to claim the insurance, then you are the owner. Then you should show that as an inventory for you. Without showing inventory in your books of accounts, how can you claim insurance? Otherwise, if the owner is telling till your warehouse, I am the responsible person. I will deliver to your warehouse. That time you will not record it anywhere.
So it
That's
all
not a goods in
depends on the
transit.
contract what I signed with the vendor. Basis on
Yeah, that contract on board, that all comes into picture.
Yeah,
If the vendor is telling, I will be the responsible person to hand over your goods till your warehouse, till your store, that time it is not goods in transit. Once it reaches you, you have to consider it as an inventory. Otherwise, no.
correct. That is what I meant actually.
Yeah, but if your goods are in transit, if you have an account in goods are in transit, it is not on board. Suppose you are having an entry here, goods in transit. If that is the case, the company is not waiting till the goods are reaching to your place to record. Goods are in transit means once he dispatches, you are recording it. Okay, in that time, it's a stock.
Correct, sir. I agree with you. But in generic terms, I don't want to take a risk. I want, because if something goes, if a vendor says I have
No, that is your accounting policy. That is your accounting policy. We are now talking about an item in the trial balance. If there is an item in the trial balance, goods in transit, as an accountant, I have made some provision for goods in transit. Then I have to close that. No. If you raise an account, if you open an account, that need to be closed when you are preparing a financial statement.
Okay.
So goods in transit account is already there in the trial balance. It need to be considered as stock, as your inventory in the closing stock.
Okay, sir. Thank you. I got it.
Okay. So next we have to see the next note, that is change in inventory. This 1,20,000 is minus and 40,000 is plus. So the net effect is 80,000 minus. I have tried it in goods change in inventory 80,000 rupees. 80,000 rupees change in inventory. Okay. Next note what I have prepared. Employee benefit expense we prepared. The total of that employee benefit expense I am taking. It becomes 1,14,000 plus 86 plus 20 is equal to 2,20,000. So 2,20,000 I am bringing to profit and loss account under the heading called expenses in the name of employee benefit expenses. Employee benefit expenses. Okay. Then we have one more note prepared, that is other expense. Already we have taken this depreciation, right? 26 we already taken. Depreciation we have taken 26. Yeah. Now other expense heading we prepared, that becomes 44,000. That becomes 44. The total of this, the total 3,800, 4,000, 20,000, and 16,200. So 44,000 is the total. 44,000 is the total other expense. So all the A, B, C, D, B is not there. Purchase is not there. Purchase is not there. So I can't see here in purchase. So I'm leaving it. Okay. So total of this, total material consumed, and then change in inventory minus 2,20,000 plus 16, 26, 44. Take this calculator and do it. How much it comes? 8 lakh minus 80,000, 720, 720 plus 220, 940, 940 plus 16, 956, 962, 982, 986, 226. Is it 226? Check it. Somebody can calculate and tell me.
Can you go up, sir? Can you go up?
It is here written 1026.
1 second.
Just check this. 1026 is correct.
Yes, sir. It's 1026.
Yeah, 1026 the total expenses. Okay. 1026 the total expenses. So I have to minus the total expense from the total revenue. We don't have any other revenue. So our total revenue becomes only 12 lakhs. 12 lakhs. So from 12 lakhs, I am minusing my total expenses. That is 1026. So 12 lakhs minus 1026. 12 lakh minus 1026 is equal to
174.
1 lakh
74,000.
1 lakh 74,000 is the profit. 1 lakh 74,000 is the profit.
On that you are paying tax.
Yeah. From that we are just providing tax. Tax is given in the question. Provision for tax we discussed now before.
60,000 something.
60,000. We already taken here and written 60,000.
Yes, 60,000.
So now 1 lakh 74 minus 60.
1 lakh 14,000. 1 lakh 14,000.
14,000. 1 lakh 14,000 is the 14,000. This is minus. This is what the bottom line of the business. 1 lakh 14,000 is the profit. This profit can be distributed to shareholders depending upon the company's dividend policy. Okay, there will be annual general meeting. They will discuss this year we have this much profit. What are we going to do with profit? That is profit management, earnings management. We will study in the next semester how we are going to do earning management. Whether the company is going to retain this 1,14,000 in the business itself to do the next year further development for the business, or it is going to distribute this to the shareholder in the name of dividend, earning management.
Hello,
Either it
Professor.
can be distributed as dividend, or it can be reinvested in the business, or it can be reinvested. If it is reinvested, that is called retained earnings. Retained. This is earnings. 1 lakh 14 is earnings. If it is not given to the shareholder, it is called retained earnings. Okay. If it is given to the shareholder, that is called dividend. It is going to shareholder. Okay. That you will study later in the next semester called financial management. Okay. So this is what simple profit and loss account. I repeat again, revenue from operation is nothing but sales minus sales return. Other income means apart from sales, is there any other income that need to be recorded in other income? Both need to be added together to arrive at total income, total revenue. Okay. Then all expenses need to be brought down one by one, A to F, G, material consumed, purchase, change in inventory, employee benefit expense, finance cost, depreciation and amortization, other expenses. What is material consumed? It is nothing but raw material consumed. Raw material consumed, raw material. How do you calculate? If it is given, take it as it is from the trial balance. If not, opening stock of raw material plus net purchase of raw material. What is net purchase? Purchase minus purchase return of raw material minus closing stock of raw material is equal to material consumed. Okay, except closing stock, everything will be there in the trial balance only. Okay. Next, purchases. This purchases means purchases of stock in trade. Purchases of stock in trade. Finished goods you are buying from outsider and you are selling it. Okay, if that is any case, you would write that purchases. Okay, don't confuse. Purchase of raw material is used to calculate material consumed. Purchase of stock in trade is directly written in the profit loss account. Directly, purchase of stock in trade. Okay. Then change in inventory. Change in inventory means except raw material, opening and closing, all other things opening and closing should be compared and the results should be written here. What is that? Change in inventory. Change in inventory means opening stock of stock in trade, opening stock of work in progress, opening stock of finished goods put together minus closing stock of, I write it here, opening stock in trade, opening stock in trade, opening work in progress, opening stock of finished goods, opening stock of finished goods. All these things put together minus closing stock of all these things, closing of all these things, closing of all these things, closing. Closing of stock in trade, work in progress, and closing stock of finished goods. Okay. This, if you do, you will get change in inventory. So if my company is only trading company, then I don't have any opening stock of work in progress or closing stock of work in progress. If I'm a manufacturing company only, I'll have work in progress. If I'm not a manufacturing company, work in progress will not be there. Okay. Got it? Next, all expenses relating to employee benefit, wage, bonus, salary, everything put together, employee benefit expense. Then any expense related to bank charges, interest will be grouped under finance cost. Then depreciation, all other expense, total this minus from the total income, you will get profit. If there is any tax, minus the tax, you will get the net profit. This is called net profit. Okay. Any doubt with regard to this? It's so simple actually. Normally the BCom and other students might have studied in a T format. I repeatedly telling, there are many students from BCom or BBA. You might have not done probably this kind of income statement. You have to do only in this format. Companies Act is asking only this format. You might have studied in another format like this. It is not to be done. Please understand, it's not to be done. I'm just showing it like this. One side all your income, one side all your expenses. This side you will write the income. Okay, income. This side you will write expenses. That time also you can compare and you can bring the difference. This side expenses, this side income. If you compare these two, you'll get a difference. That is income, profit or loss. We might have done like this. That is okay for the sole trading concern, or that is okay for the other than joint stock companies. This is not accepted by Companies Act, so we have to do only in this format. There is no gross profit. Look at this. There is no gross profit revealed in this statement. Only net profit. This is net profit. Okay. This is the format expected by the Companies Act 2013. We will have to publish this in the website, and it should be annexed to the annual report of the company to be circulated to shareholders. So it is to be in this format only. And again repeating, it should be in the format only. Those who are not attending the class, or those who are taking it very easily, okay, I know accounts, they will prepare. Last year, many people have prepared in that format. I have given 0. So please don't do that. Please prepare in this format. Engineers and others, please don't worry about that format. You are learning this format only first. Okay, but those people learned, please unlearn that and learn this and do it in this format. Okay, any doubt with regard to concept of profit and loss account?
Sir, excuse me, sir. Under expenses, can you please once again explain about ABC, that material consumed, purchase token?
Yeah.
Thank you, sir.
See, there are 3 type of companies. I told you 3 type of businesses. One is trading business. Another one is manufacturing business. Another one is service business. I told. Now, for time being, forget about service business. Now, the combination of these two. Okay. A company may be only trading. What is only trading? Buying something and selling without adding any value to that. Okay. Manufacturing means buying something and adding value to that and then selling it. Okay. There are another company which will do both. They will also produce and sell. They will also buy the output from outsider and sell it. That is called the third type. Okay. I am purposefully ignoring service businesses, because service businesses, the terms what we are using here may be different. They won't have raw material. Okay. So I'm ignoring service. Now these 3, keep in this mind and come to here. Now, first expense is material consumed. Material consumed will be only possible for this company. Any company which is manufacturing, which is into the process of converting a raw material into finished goods. Only those company will have materials consumed. If it is a trading company, it will not have. Suppose if it is a combination of these two, that time they will also have. If the company is manufacturing something, material consumed will be there. Otherwise, here it will be 0. Got it? Okay. Then how do I calculate material consumed? In the trial balance, I will be getting an item called purchase of materials, opening stock of materials. Then in the adjustment, there will be an item called closing stock of raw material, Okay. With the help of this, I have to identify material consumed. How it is? Opening stock of raw material plus net purchase of raw material minus closing stock of raw material. The result of that is called material consumed. Madam, is it clear?
Yes, sir.
Material consumed is clear. Next, point number B. Purchase of stock in trade. This will come only for trading businesses. If your business is manufacturing business, this row will be 0. That's all. Purchase of stock in trade. What do you mean by purchase of stock in trade? You are buying some material as it is, you are displaying it and you are selling it. Those things are called as stock in trade. Okay. So if that is the case, in trading business, in trial balance, there will be an item called purchase of stock in trade. That you have to bring and write it here without any addition, without any minus or something. Purchase of stock in trade. In the trial balance, if you have purchase of stock in trade, just bring that and write it here. That's all. If that is the case, the company is of trading nature, or the company is also doing a trading, buying and selling. Okay. Next. If your company is a manufacturing company, or your company is a trading company, in both cases, this change in inventory will come. What is change in inventory? Except opening and closing of raw material, remaining all opening and closing should be compared. The result of that is called change in inventory. What is that? Except raw material, you may have stock in trade, you are buying no from this purchase, you might have left with some item unsold, or last year unsold items are there. That is called opening stock. That is called opening stock in trade plus opening stock of work in progress plus opening stock of finished goods. This opening stock of work in progress means you are a manufacturer, you still not completed your finished goods. Raw material is converted but not reached to the stage of finished goods. That is work in progress. If it is there in that trial balance, take that opening balance of work in progress, then opening balance of stock in, opening balance of finished goods stock, finished goods. All these things put together minus closing stock of all these three. Where this closing stock will be there? Closing stock will be there in the adjustment after the trial balance. If there is a chance, there will be there in the adjustment. Okay, in the adjustment. Bring that, minus it. Make it in a note. Make it in a note, not here. Make it in a note. You will be adding or minusing. Then you are bringing this into the statement. Change in inventory. Okay, madam?
Okay, sir. Thank you, sir.
Yeah?
Yes, sir.
Yes. That is change in inventory. But always, not necessarily all these things will be there. In this question, we have only stock in trade, opening and closing. Then we take in this opening and closing. It can be minus as well. What is the meaning? What is the meaning? This much of stock was available with us, still not sold. If you consider that as an expense, you will not get a correct profit. You spent money, but this worth is left out with you. This 80,000 rupees worth of stock is still with you. If you don't consider that as a asset, if you consider that as an expense, you will be inflating your expense. Okay, that is why this 80,000 is minus. If it is minus, means what? In expense side, if it is minus, means it's an income. That's the meaning. Or we are minusing, we are reducing the expenses. Though we spent a lot of money, say for example, purchase of stock in trade was 2 lakhs, but still 20,000 worth of stock is left with you. If you consider 2 lakhs here, then you are considering more amount of expenditure. That is why the 20 is taken here and minus. Okay, so change in inventory. Yeah.
Yes, sir. I have a doubt. See, in reality, in a I work in a manufacturing company, but I'm new to accounts. For my understanding, for everything, opening stock in trade, opening stock, work in process, and everything, we calculate everything and we make it like how much amount we spend. For example, out of 10,000 10,000 units or 10,000 rupees of raw materials, 5,000 are work in process, 2,000 is in trade, 2,000 we have made it a fixed goods. Likewise, we calculate of a whole year, and then we will minus the closing stock of all three things, and then that will be the cost. Like for each thing, we have to convert it to the money according to the number of materials we have, and then we give the final rupees. How, I mean,
no, what you are explaining, who is doing that?
I mean, I don't know, sir. I want to understand that.
No,
In reality,
you know that it is happening in your company. No, in what stage it is happening? I'm asking.
I don't know, sir. I am in marketing field.
No, that is okay. But you know this information. No, know the information. You should know where it is happening and
with your class, I understood this, sir. I don't know anything.
See, the total cost of goods. The cost of goods for this company is this much.
Okay.
8 minus 80. 7,20,000 is the total cost the company has spent on goods. That's the meaning. 8 lakh minus 80,000. 7,20,000 is the total amount what they spent on goods, what they sold. What you are telling, opening stock, closing stock, everything is taken care here. See, opening stock of material, opening stock of All stock in trade, everything is taken there. But you are telling it is calculated. Then I want to know what stage, because there is another stage in cost accounting also they will do to know about the goods, what they are producing, what they are selling. They do that. So I wanted to know which stage they are doing and what is your exact doubt.
Okay, my doubt is how they calculated that 80,000 change in inventories.
Yeah, the
Yes.
change in inventory 80,000 is nothing but opening stock of all this minus closing stock of all this.
For each of these, there will be some value, right?
Yes. Suppose your company is having 4 materials, 4 A, B, C, D, 4 goods are sold. Then opening stock of A, opening stock of B, opening stock of C, D, then minus that. See, in academics, we just take the overall. But in reality, I can't compel the company to sell only X product. The company will have product line maybe 10, product line maybe 20. So all the products line 20 together is opening stock.
Yes. For the each thing we calculate it, and then the change in inventories we get it.
Each and every item they will calculate and they will add it to total.
Yes. Thank you, sir. Thank you so much.
So remaining all is expenses minus from the income, we are getting net income. That's all. Come to the balance sheet. So in this question, the colored one, this colored one are left out from the calculation of profit because these are all balance sheet items. So I did not consider that into profit and loss account. Okay, I'll teach you balance sheet separately in this question. Balance sheet. This is also profit and loss account. So many examples are there. You can practice later. Yeah, this is one we can do now. The completed one. Yeah, full-fledged one with the balance sheet. Okay, with the balance sheet. Yeah, with the balance sheet. Look at this. This is an example. Okay, illustration number 6. I'm going to teach you now. This is a trial balance. Look at this. It's a trial balance. You know, trial balance should be equal, both sides. Debit side and the credit side should be equal, trial balance. And this is called additional information, adjustments. Okay. Look at the question. I read it for you. The following is the trial balance of Detergent Company Limited. Look at this word, Company Limited. As on 31/3/2018, or you can take 20. Yeah. The company has 20,000 shares of 100 each as registered capital. What is this? When the company is started, the company will approach that SEBI, Securities and Exchange Board of India, to permit the company to raise the capital to a maximum of some amount. The total amount which I can collect it from the public in the name of equity share capital is called as registered capital. Registered capital, or you can call it as authorized capital. Authorized capital or registered capital. I repeat again, registered capital or authorized capital is nothing but the maximum amount of capital which a company can mobilize from the general public as allowed by the government, called SEBI. That amount is maximum. This company cannot raise more than 20,000 into 100 rupees. That is 2 lakh. 20 lakh rupees is the maximum amount this company can raise from the public. It cannot raise more than 20 lakhs. Are you getting my point? 20,000 shares this company can issue, the company can sell, okay, at any given point in time. One share is equal to 100 rupees. So total is 20 lakh rupees only this company can raise it, collect it, mobilize from the shareholder. If it wants more than 20 lakhs, it has to go again and apply for the SEBI to get again, this can be improved, increased. Okay, right. Now, the company has issued only 3,000 shares. Look at this. The company is allowed to issue 20,000, but the company has issued only 3,000. Later, they will issue. If the company is growing, later they can issue the shares. What I mean by issue the shares? Collect money from the new shareholder and they give the share certificate. Okay, right. So share is rupees 3 lakh rupee. What will you do with this amount in the preparation of financial statement? Yeah.
Capital, no, sir.
That's a capital
Yeah.
liability.
It's a balance sheet item. It's a
Liability.
balance sheet item. We can group in this. Yeah, it's a balance sheet item. Okay, right. In balance sheet item also it's a liability. Okay, liability. Next, what is this calls in arrear? Anybody in the class knows calls in arrear? Commerce student?
Money
Calls
yet to
arrear.
receive, sir?
Yeah, yet to receive. That's the point. See, when the company gives advertisement for these 3,000 shares, there are people applying IPO. They are applying, and they are getting the shares allotted. But later, they are not able to pay the money which is asked by the company, which is due to the company. That's called calls in arrear. Company is waiting. They may give later, so they are waiting. 60,000 rupees is yet to come for the shareholder, who has already agreed to buy our shares. They also sold to them, but they did not pay full. Suppose one share is equal to 100 rupees means some shareholder, say for example, some 16 shareholder or 1,000 shareholder still not paid full amount. The pending amount is there. That's called calls in arrear. So it is an asset to the company. Asset to the company. Yet to receive. Okay, it's not a daily routine. Whenever there is a selling of shares, that time only. It's not a daily routine. It will happen once in a while. Normally one time in the lifetime of the company, issue of shares will happen only one time. Majority. Next, second time issue of share capital will happen rare of rarest. Some companies will go for that.
Right, sir.
Yeah. Yes. Okay. So reserve fund. What is reserve fund? What to do with the reserve fund in the preparation of financial statement? Reserve fund is
Liability. That's a liability.
liability. Not just liability, it's an equity.
Yeah, profit transferred to the balance sheet, right, sir?
Still now the company has made profit. Out of the profit, this much they are keeping as a reserve. They did not give to shareholder. So in the balance sheet format, you remember the balance sheet format? In the balance sheet format, we have one point in the equity and liability column called resource and surplus. This resource and surplus will contain this amount. Okay, this is up to 31st March 2020. Without the current year profit, our reserve is this much. If you have profit of the current year, out of that, if you create some reserve, you have to add with that reserve. Total reserve will go to balance sheet. I will tell you while doing it. Okay. Then building. Quick building.
Balance sheet.
Balance sheet.
Assets.
Fixed deposit.
Assets. Balance sheet.
Balance sheet. Wages.
Expenses. Profit loss account.
Wages.
P&L account.
P&L account.
Employee.
Machinery balance sheet.
Machinery balance sheet.
Furniture balance sheet.
Furniture balance sheet.
Balance sheet. Very good.
Purchase and sale, profit and loss account.
Profit and loss account.
Profit and loss.
Profit and loss account. Debtors and creditors.
Balance sheet.
Asset. Debtor is asset, creditor is liability.
Yes, sir.
So it's a balance sheet item. Bills receivable and bills payable. BR and BR.
Balance sheet.
No, it's a balance sheet item.
Balance sheet.
Bills
Balance
receivable
sheet.
means accounts receivable. Bills payable means accounts payable. Bills payable is a liability. Bills receivable is asset.
Current liability and current asset.
Yes,
Director fees. P&L.
Director fee. P&L account. Next. Returns. What is returns?
It can be sales returns.
Yeah, debit side.
Or purchase
Debit side
returns.
amount. The amount in debit is called sales return. Amount in credit is called
Balance
purchase return. So P&L. Freight.
P&L.
The expenses. P&L.
Freight means transport cost on purchase.
Logistics.
Manufacturing expense.
P&L.
P&L.
Opening stock.
Balance
P&L.
Huh?
P&L.
P&L.
To calculate that work in progress, to calculate the goods consumed or to calculate the change in inventory. Okay.
P&L.
Interim dividend.
P&L.
P&L.
Dividend is out of profit. It should not be an expense. Please understand, in this format, Do you have any item under expense called dividend? Look at this. No dividend is there. So dividend will come after the tax. After the tax, dividend will come. You are earning profit, you are paying the share of the government, remaining is there. From that, you give share to shareholder. That is called dividend. Interim dividend means without waiting till the end of the day, I just guess, okay, company is going good. Company will definitely make profit. From current year, I will give some dividend, interim dividend. In between the final year, I will give one dividend. That's called interim dividend. So it's not an expense. It is not an expense. It is out of profit. So I should not consider this as an expense. Okay. So next, corporate dividend tax. Corporate dividend tax means if you pay dividend to the shareholder getting income. So income tax to be paid by the shareholder. But government says to encourage the people to invest in the equity share of the companies, dividend income in the hands of the shareholders are exempted from tax. But government is asking the company which is giving dividend to pay income tax on the dividend. So that is called corporate dividend tax.
So that rule has changed recently, right?
It recently changed. Yeah, last 2020 budget it was changed, but this is the previous year. But consider that. Actually, to encourage the domestic investor in the share market, government was giving this option. Okay, to encourage dividend in the hands of shareholder from the domestic company were exempt. Now also it is exempt, but to some extent they have made it taxable. Okay, beyond that, okay, let us not go in that much detail. It is not an expense, that much you remember. Dividend is not an expense. Dividend is out of profit. After net profit, we have to deal with this separately. I will tell you when I am dealing this. Okay. Next, audit fee.
P&L, other expense.
Other expense. Yeah, this profit and loss account. What do you mean by this profit and loss account? This is the balance of last year profit. This is the balance of last year profit. Last year, your company has made some profit. Out of that, 27,000 rupees is still there in the P&L account itself, not distributed to shareholder. You remember I was telling you, I have told you that earnings management. So it comes under that. I will teach you how to record that when I am telling in the, after finding out the profit, we have to deal with this. I will tell you. Understand this amount 27,000 rupees is nothing but the balance of profit and loss account of last year. You earned some 50,000 rupees profit, you paid some tax, you paid some dividend, remaining amount is 27,000. That's the meaning. So it will be added with the current year profit. It will be added with the current year profit to know the closing balance of profit and loss account. Okay. Of course, it's a balance sheet item. It will go to balance sheet under equity side, but not just 27,000. If we have anything distributing out of this 27,000, that need to be minused. If we have anything to add with this, what is that add with this? Current year profit. Okay. I repeat again, last year profit plus current year profit minus any distribution out of profit is equal to closing balance of current year profit and loss account. That will go to balance sheet. Okay. Right.
Professor,
can we talk about assignment?
Sorry?
We're getting late for the next class. Can we discuss about the assignment, because 1:30 we have to join another class again.
Oh, I was informed by your office that you don't have class afternoon.
No, sir, we have. Later it's updated like we have joint class.
Okay. Just to give me 2 minutes, I'll finish it. The tools, what is tools? Tools and asset. Remember expense. Expense. The portion of this is an expense. The portion of this is an asset. Okay. Current year permanent expense is an expense. Remaining is asset. Okay. Let us take this in the next class only. I just finish this. Debenture is a.
Debenture is a balance sheet.
Liability. Interest on debenture.
Income.
Expenses, no, sir. Expenses.
Finance cost. Investment is
balance sheet.
Goodwill is
Asset.
Out of.
Asset. Insurance and cash.
Expenses. Balance sheet. Profit and loss
Printing
account.
and stationery.
Other expenses.
Expenses.
Goodwill
Other
is
expenses.
out of it means.
Cash and bank balance.
Asset.
Asset.
Hello, sir.
Yes, sir.
Goodwill is out of it means.
Goodwill is?
Goodwill is out of it. Goodwill.
Please tell me, goodwill is?
It's an asset.
But actually, I am asking.
Intangible asset, yeah.
Intangible.
Goodwill is an asset, it is an intangible.
Intangible. Okay.
Yeah. Okay. Now see, director proposed a dividend. All these things are adjustment. We need to adjust wherever these relevant items are there. With that, we have to adjust. Say, for example, insurance prepaid. One example I'll take. Insurance prepaid. Actually, insurance is an expense. It is given in the question, insurance how much? Insurance given as 20,000 rupees. This is prepaid. Insurance prepaid means we paid in advance. We paid more than what we enjoyed. So this 1,500 need to be minused from this insurance. From this 20,000 rupees, 1,500 should be minused. Effective insurance for the current year is only 18,500. How it is 18,500? 20,000 rupees I paid to insurance company. But 1,500 rupees worth of my policy is going to give benefit in the next year. So actually, my total expenditure for the current year in terms of insurance is only, where it is, I'm sorry, it gone. Only 18,500. Only 18,500. What about the remaining 1,500 rupees?
That's an asset.
1,500 rupees will be asset. 1,500 rupees will be called as asset. Okay, it will be recorded in the balance sheet. This is balance sheet item. This much is balance sheet item. This much is profit and loss account. If this is not given, the E point is not there in adjustment, I will write all the 20,000 rupees in the profit and loss account, as I was doing in the last question. Okay, we will do this question in the next class. Don't worry. Now you try. Okay, those who are understood, please try this. I will just show the answer and explain it for 10 minutes in the next class. Now tell me what and all you want to ask regarding assignment. I'll upload this in the LMS, the entire file. You can refer from there. Yes. Yeah, there are some questions you told, no?
Yes, sir. From section A, the group assignment, one assignment is there, assignment first. There you ask like introduction of GAAP, Indian and international GAAP, accounting standard, international accounting standard, IFRS, application of INDAS, India conclusions, and reference to be cited properly from EPA form. So actually I didn't understand this question on the question first. This is the 50 mark. So what exactly all the information or all the things we have to write like a essay or how it is? So just can you brief what exactly this question is asking for?
You would write an essay about that IFRS.
So the question is like 4 point. It's written. It is assignment on accounting standard IFRS and INDAS.
Yeah.
And these three things are there. Content to be
write an essay on these three topics, sir. That's all, sir.
Gap is also there.
Sorry, sir. Yeah.
No,
4 topics.
gap.
Yeah,
He missed gap. Yes.
Four topics. Yeah. Write an essay on these 4 topics.
Okay.
So should we submit it tomorrow only? This.
1 minute. 1 minute. The gentleman is satisfied or not? You have to ask. You are
Yes,
going
sir.
to
I'm
submit.
fine.
The gentleman is...
That's right.
Yeah.
Yes,
Got it, sir. This is a 4 topic, and we have to write the essay on that.
You have to write an essay on the 4 topic.
Correct. So what is this APA format? Is it anything? The point you have read properly in the APA format.
Okay, sir. Delete that. Last option, you delete that. Last one, you alone, you only, not for everybody. You only, please delete that. Don't worry about that.
Fine, sir. Thank you. Then it's clear.
Yeah. It's only for him, not for anybody else. Yeah.
So tomorrow only we should submit this thing. Assignment.
Tomorrow?
It is telling 7th is the date. So today you thought as accounting equations.
Yeah. Today you prepare it and tomorrow. Not possible?
No, sir.
When
When
sir,
will
we
you
request you to
upload
You said
extend the
delete the
deadline for this.
delete the
One
last
by one,
option.
one by one, please, 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 please.
So you
Sir,
said delete the last option APA format. Is it for everybody or?
Madam, just now I told you.
He said only for him.
Yeah, that's what I told.
Sir, could you kindly extend
Please
the
teach him also. Let
assignment?
him also submit it in the same way. I will be happy. Let him also get.
Sir, could you kindly extend the assignment date, please? Yeah.
You submit it,
When
sir.
will you upload the PPT for today's class?
By evening.
Okay, sir. Thank you.
So about the submission, that equation standard.
Submission. Really, you want to extend the submission date?
Yes, sir. Please.
One
Yes,
part
sir.
is over now. One
Because-
part is over. One part should have been over by this time. That gentleman is asking, but I don't know. But GAP, IFRS, IndAS, IAS should have been completed
So
by
that we
you.
will submit if you want, but the second part.
Yes, sir. Yes, sir.
No,
That
no,
is done.
not like
For the second
I
part,
want
time is
something. And B section, I already talked about this equation long back, 15 days back.
Yeah, sir. We're talking about section. This is section A.
So
In,
A section
section-
also please try today and tomorrow. Submit it by Wednesday. Only for A section, submit it by Wednesday.
Okay, sir. Thank you.
Okay, but don't worry about that. Date is not changed. Don't worry about that. I will not change it. You submit it by Thursday. It will accept.
Okay,
But
sir.
A section, sorry, B section, please submit it by tomorrow.
So B section when, sir?
E section tomorrow, A section by Thursday. That is done.
Yeah, because A section claims that it is start only today. So I am giving 2 days time. You have enjoyed 15 days time. So please, you submit it tomorrow. B section submit it by tomorrow as it is. A section, please submit it by Wednesday.
Sir, it's other way, sir. Section
It's other
A
way, sir.
was
It's
a gap,
confusing.
which was
Is
taught
it?
earlier.
No, I taught accounting equation last class for B section only, no?
A section also you actually thought, sir.
no, sir. You
No,
have
sir.
told
No,
that.
no.
But they are
Section
claiming.
A now
Okay,
only.
sir. No confusion. No confusion. All of you submit by Wednesday.
Okay, thank you, sir.
One doubt.
All of you submit by Wednesday. Then don't come and tell me, sir, they had 15 days time. We have only 15 hours
Okay.
time. Don't tell like that.
Sir, excuse me, sir.
Please do it. Cooperate.
So you told
Yeah.
that.
Simple, man. It's easy. Very easy. Only 1 hour you have to sit and if you are really good in plus minus, it is done. Okay.
Yeah, excuse me, sir.
Yeah, sir.
Yeah, sir. The book you have mentioned, the accounting for managers will dispatch or from where we will get that?
I don't know. Ask that gentleman. No, that I have already told them to give it and collect the money later, but I don't know what's happening. They are collecting money and giving it. Book is ready with him. Whether it is dispatched or not, I did not get update. 2 days back, the person who was arranging it told me that he is in touch with the publisher. They will send it. I thought today it will reach. From there I can teach, but it is not teaching. So I thought of showing this problem. Maybe you contact that one classmate of you who is coordinating. Ask him to collect it as soon as possible. I also told him. Are you there? What is his name?
Yes, sir.
Yeah,
This
yeah.
actually,
You please
I
get
I
it as soon as
tried
possible.
to contact publisher, but he said he'll send it by yesterday afternoon, but he has not replied after that.
Okay, I also remind him by today evening. Maybe tomorrow let him send it to you, respective places. You can get it.
Sure, sir. Thank you. I'll take care.
Yeah.
Okay.
Sir, for assignment, I heard 2 dates. One is Wednesday, one is Thursday. Is that Wednesday or Thursday, sir? Which one is the?
For accounting for managers.
It's
Yes,
Wednesday.
assignment.
Okay, some of you please write a message in your all the groups wherever accounting for manager or anybody is there. Wednesday is the last day to submit assignment number 1, A and B. All.
Sure. Thank you, sir.
One course, one date. Okay.
Sir, you are told that
Yeah.
those who are from the BCom background has to submit the balance sheet in the you have taught in today's format. Is it applicable for assignment?
What I told?
Balance sheet as per the Companies Act. You have to follow. So it is applicable for the assignment 2 also for the sir?
Madam, please understand. This is different topic, balance sheet.
Okay, sir.
And
He's talking about the
assignment is just
exam.
a accounting equation that is only a rough idea of a balance sheet. There is no format because that assignment was given before the balance sheet date and all. Now only we are learning balance sheet. Assignment was given long back. So that is not in a format. Only arrangement of assets one side, arrangement of liabilities and equities another side. It can be either left and right, or it can be above and below. Any way is okay.
Thank you, sir.
Just you arrange it, that's all, not a format.
Okay, okay, sir. Thank you, sir.
Okay, accounting equation does not have any format or something. Since I asked you to prepare a balance sheet, you are just preparing in a rough idea, that's all, not a format of company side. But in exam, if it is a final accounts, then you have to prepare in this format what we have been discussing for the last 2 hours. Okay, thank you. I think we have taken so much of time since you have another class. To attend
Thank
our
you,
class.
Professor.
If you have any
Thank you,
queries,
sir.
please come back to me in WhatsApp. Thank you.
Thank you,
Thank you,
sir.
sir.
Thank you, sir.
Thank you. Submit assignment without fail on Wednesday.
Yes, sir. Okay, sir. Thank
See
you.
you. Bye. Bye.